I sat down for 2.5 hours with everybody that's watched through my YouTube tips playlist going over the supply and demand methodology, where I answer your guys' questions about trading, about the methodology, going over trade reviews, common mistakes that I see everybody making, so you guys can start becoming a consistently profitable trader. We go over trade reviews, my exact trade setup and why I'm doing what I'm doing, tips that I see everybody doing wrong and how to correct them when you're trading this methodology, as well as answering questions about trading in general, as well as methodology. This is a fantastic meeting to listen at whole. I was expecting this meeting to go an hour. We went for 2.5 hours straight answering nonstop questions. Golden nuggets are dropped in this, guys. So I really appreciate if you guys like the video, subscribe. And if you guys have any questions about the methodology or trading in general, let me know down below. And you guys can always reach out to me on social media as well, at Moneyball Austin, Facebook, Twitter, Instagram, and I have no problem helping you out there. I want you to feel like you are actually part of the meeting live. So if you have questions throughout this video, tag me in the comments below saying, hey, Austin, could you go into a little bit more detail about what you mean at 1 hour and 23 minutes and 53 seconds? I don't quite understand. Hey, what do you think about this? Hey, I want you to feel immersed. I want this to feel more like a community type of video meeting. All right. Lots of great golden nuggets that are only dropped for slightly 1 minute. So it's really important that you listen to the whole thing. So enjoy this meeting. This is something that we do every single week in the private group. Once on the Sunday meeting and once on the Wednesday meeting, going over everybody's trades, talking about what's good, what's bad. And then the Sunday meeting is where we go over everybody's weekly watch list. So I hope you guys enjoy it. Lots of humor, lots of jokes. I mean, I'm going for 2.5 hours, so I got to shred some personality into this video. So thank you guys so much. Enjoy it. And you guys are on your way to becoming a consistently profitable trader. I'll see you guys soon. So if you guys have any questions, feel free just to ask or anything. But if you guys have mics, feel free to jump on. As long as your mic is respectable, as in you don't have 10 people in the background cooking and yelling at each other, or you have a poor mic, then please don't do that. But if you have a good mic, like Frank, you were talking to me, you got a crystal clear mic and nobody's around you. So I'm probably going to be talking to you unless other people jump on the mic as well. We got right now 10 people in here.
Oh, good.
Yeah. Because it's no fun having a one-way conversation by myself. At least I can pick on one person, and usually that person gets the most value out of anything like this. What trading strategy have you been focusing on lately?
The supply and demand.
Yeah, it's a good trading strategy. I don't think I think it's pretty naive to say it's the absolute best one out there. There are many different trading strategies, many different ways to trade. And I don't want to sit here and say it's the best way to trade. I think that's a very delusional thing to say. What I do think is important is to find a trading strategy that makes sense to you, the trader, and being able to work around that trading style or that trading strategy to fit your type of trading, whether you are swing trading, day trading, or scalping. You know what I mean?
Yeah.
Are you typically looking at scalping or swing trading or day trading? The same thing.
I'm more like swing trading and day trading.
Okay.
I'm more to that too.
Yeah, that's perfectly fine. And so you'll notice it's a lot of the same kind of top-down analysis. I know some people asked me a couple of questions. We're going to go through this whole thing, like a couple trade reviews, a bunch of questions. I'm sure there will be one or two things that will just lead to a second or third question or a more in-depth conversation. So if you guys want to ask questions or just follow up on stuff, just don't hesitate to ask and we'll find a way to jump into it. But I did mention I wanted to go over a couple of trade reviews, and I see a lot of problems in the trade reviews that people send me that are common in the private group in general as well for like new types of traders. And so we'll have a couple looks at that as well as kind of my exact top-down analysis. So I know it's a very popular trading system. I do have a full tips playlist that I'm sure a lot of you guys have been going through. You go to my YouTube, click playlist and then tips playlist. That will break down the whole supply and demand trading strategy. And not only that, like this is part 1, 2, 3, and then there's an hour-and-a-half course. But there's also smaller sections like how to identify zones, how to draw zones, price action. So I would recommend if you have more questions on that, and I'm going to reference some of these things that I'm going to not quickly answer, but I'm going to talk about for 1 to 2 minutes. And I'll say, watch this video for a more 15-minute longer discussion, right? How to find a good broker, why you should be backtesting, how to backtest, journaling and all that, because that was one of the biggest problems. I did have people messaging me when they were sending me their trade reviews, and I'm like, oh my gosh, and we'll get to that. But like I said, I think supply and demand, it's a great trading strategy if you are consistent and you know it resonates with you. I did mention that. I think it has to resonate with the trader. And so I'll kind of just go over my top-down analysis. This usually doesn't change. And I'll kind of explain to you what I'm quickly trying to do. Obviously, I can't break down the whole methodology. I'm here really to answer your type of questions, but I wanted just to break down my type of A1 trade setup so you guys can typically see here. So on this one, Euro Canadian, this is a weekly higher time frame, so weekly 4 hours. So this would be a type of swing trade. Who was I talking to earlier? Frank, this would be kind of the time frame sequence that you would be using, either like weekly 2 hour or weekly 4 hour.
Yeah,
honestly, this is a very popular question. And actually, let me just pop over to here and type in best trading. I know. Time frame sequence. Because this is one of the most popular trading questions I get, like what's the best time frames to be using. And this is just going to be a rough guide. You can see right here, I've made a video on it before about the best time frames to use, swing trading versus day trading. But typically, if you're going to be long-term position trading, this is the time frame that you're going to be looking at. Can you guys see that? Monthly, daily, using the monthly as your highest time frame, your daily as your entry time frame. If you're going to be swing trading, weekly as your highest time frame, 4 hour or the 2 hour, typically as your lowest time frame, as your entry time frame, as we call it. And then for like intraday, daily as your highest time frame, 1 hour or 30-minute. Doesn't matter. You could call swing trading this daily 1 hour. It doesn't matter. It's just a very rough guide. Okay. But what I wouldn't be doing is I wouldn't be using the monthly and the 5-minute as a combination. I think that's way too big of a difference for the time frame gap difference. So keep it somewhat respectable. If you wanted to use monthly 4 hour, sure, I think that's reasonable. All right, see if that works. I think it will. Right? This is just a very rough guide. People ask me all the time, what time frames do you recommend using? So this is it, kind of 1 hour, 1 minute for scalping, 4 hour, 15-minute, or 5-minute as your daily income. I mean, you can see it right here. Right? But then there's also the one time frame sequence setup that we will also talk about very briefly. That's where we just remove completely the higher time frame and we just focus on the lower time frame. Does that make sense? Just wanted to quickly get that out there because I know there's a lot of questions about that. It's one of my pet peeve questions. So let's go back over here. And we look at this trade review. So first thing I always do is I'm always trying to draw out my higher time frame zone. Just be aware of where the big money is coming into the market, because that's kind of the whole concept of supply and demand, right? You're trying to identify where the big money is buying and selling. So we start by drawing out our higher time frame weekly supply and demand zones. In this case, this was the next nearest supply zone. It was currently in it. So yeah, I want to use it. Great. The next fresh weekly supply is up here. Yeah, I would 100% have that drawn out. Or if I know I'm going to be drawing out these weekly zones in a week, then it's probably not going to, price is not going to come up into this area of weekly supply over the next week, right? Probably over the next month at the earliest. So I don't want to go off and start drawing out weekly here, weekly here, weekly here, when some of these zones are months in advance, months away. So I just like to draw out either the one that's currently in play or the next one above. So in this case, this right here is the current one in play, so I want to have that one drawn out. If I was going to draw out my higher time frame opposing zone, then this would be my opposing area of demand. Obviously, I'm not going to get into how to identify zones, how to draw zones. This is more of a meeting answering your guys' questions. But I did want to just quickly go over how I'm trading. Okay, so typically drawing out my higher time frame supply and demand zones, there's key things that you will notice in all my trade reviews that I see all the time. You guys, and I don't mean just everybody, I'm just saying you guys in general that are reaching out to me, is you're not trading at qualified tradable zones. It's one of the biggest problems I see. And that's a good question. What is declared a tradable zone? Because that's one of my questions that I get into. And like I said, there's going to be no flow to this. We're going to be answering questions and looking at trade reviews kind of at the same time. But we're going to mainly look at trade reviews right now. And I'm going to steer you in the right direction of common mistakes and things that I see people making that's most likely stopping them from being a profitable trader with this methodology. I've been trading it for over 8 years. I have my own group, helped many people become consistently profitable, now trading for prop firms. I get the same question all the time. I see the transition from struggling to break even to profitability. So I am the right guy you want to be listening to, well, it's up to you. You want to listen. I mean, I really don't care, but I'm here to offer my advice for free. So when I look at this, we were talking about tradable zones. Every zone that you will see me ever trading always has these 2 to 3 characteristics. Number one, that sounds like somebody's eating some mac and cheese. Is somebody eating some mac and cheese out there? Donovan Samuels, Colby, is that you? Oh, Donovan, I think that was
sorry,
you.
I'm cooking. Sorry.
What are you cooking there, everybody? Everybody wants to know.
Some curry chicken.
Some curry chicken. Nice.
Yeah.
Nice.
Sorry about that.
No worries. It sounds amazing. Hey, can you send me a picture of the curry chicken?
Okay. Where do I send it to?
Send me a picture of the curry chicken to one of my social medias, and then if this gets uploaded as a YouTube video, we'll have it on the YouTube video so everybody can see what your curry chicken looks like.
No problem.
All right. It'll be one of our little inside jokes.
No problem. Cool.
All right. Thank you, my friend. Enjoy your curry chicken.
Thanks.
Make sure you get that picture for me. Okay, Euro Canadian, right? So all my zones are going to have 2 to 1 strong imbalances, as that's going to let us know that there is actually a significant amount of buyers or sellers that are actually coming into the market. That's one of the biggest mistakes that I see traders making all the time, is they're trading at very poor quality zones that look like this. I'm going to be picking on people, but I'm not picking on them for bad reasons, just for good reason, just things that I notice. I have reviewed my trading, thousands of trades. I've asked other people to review their trades, thousands of their trades, and we come up with the conclusion of saying, hey, statistically, is there a difference between, let's go like this. Is there statistically a difference between leg outs, like you can literally see like this? See how those leg outs right there, we call them leg outs, strong imbalances, big moves in the market. Is there a difference between trade setups, leg outs like that, zones like that, versus, say, leg outs like this? Note, I don't want to have to redraw this, but notice how it's on a slight curve, on an angle, versus the other one, even here on the right, it's straight down. There is about a 20% difference, win-loss difference, between the good, strong imbalances that move at least 2 to 1 versus imbalances like this. Now, does that mean that, every 2 to 1 strong imbalance has to make, every 2 to 1 imbalance going to be a winning trade? No, that's just one of the criteria that we use to help us determine a good zone. There are other things that we use as well, which is very important, that I'm about to explain, and that is price removing an opposing zone and or breaking trend lines. Okay, that's just 2 things. Those are, in total, 3 things that make a good quality zone. There are a bunch more, but just bottom line, I always make sure that I am always trading at a zone that has at least a 2 to 1 move away and is declared a tradable zone by either removing opposing zone, R, we're just going to go R for removing, or breaking momentum lines. Having flashbacks right there to BLM, but it's BML. Ooh. It's a good little joke. Okay, so let's see. Yeah, 2 to 1 imbalance. It's either removing an opposing zone or breaking momentum. Something that you will always notice when it comes to my entry time frame into my 1 time frame sequence setup is I'm always doing both. I'm always doing this, right? I'm actually always having these 3, to be honest. They're always having a 2 to 1, and they're always breaking momentum and removing an opposing zone. So here, breaking momentum, higher highs, higher lows, pivot point zones, we call them. and we're removing this opposing demand zone. My gosh, I'm one ball away from drawing a nasty image. So I hope you guys get that. That's something that I always require in my trading setups. That is a video that I've made right here. Every zone has these three things: how to identify high quality, high probability supply and demand zones. It's got 16,000 views. Thank you guys very much. I appreciate that. So that's something that you're always going to notice in my trade setups, is they're always going to be having a 2-to-1 move away, and they're always going to be tradable zones. So ideally, I want to be trading inside higher time frame zones. I want to wait for confirmation and that have those three things. There are a couple other things like time that price is spent there. How far did prices leave? At what point has price gone too far and should we remove the zone? At what point is it a bad arrival and should I cancel? Like, there's a bunch of things. Like, do I need an indicator? Should I use an indicator? Like, there's so many different things, but bottom line, those are the top three things that I would strongly recommend every zone being a tradable zone for your higher time frame and your lower time frame. And for your lower time frame or your entry, making sure you have all three. Okay. So in this case, this was a, let me quickly. Okay. Yeah, you got it, Stanley. You can't hear anything. That's it's a Stanley problem. Let's see. Stanley. It's a nice name. It reminds me of Stanley Yellnuts. That's a movie called Holes. Stanley Yellnuts. So on this trade, just so you guys kind of get my top-down analysis, what I'm trying to look for. And so when I look at your trades and answer your questions, you're going to notice I've already answered some of them, but I'm going to go back and actually talk about them. So typically I am going to start on my higher time frame, as I want to be aware of what price is doing on the higher time frame. Am I trading with my trend? Am I trading counter trend? So when I start with my higher time frame, I draw out my higher time frame zones. That's the first thing. The second thing I need to be aware of what the trend is. All right, because trend is extremely important, and this is something that I've reviewed all my trades to figure out statistically what is the best trade setup, and that's something that I recommend everybody doing, is reviewing all your trades to see what setup makes you the most money. I mean, maybe let's just say you're going for a 2-to-1 trade setup, and when you're buying in an uptrend and your higher time frame is in an uptrend, statistically, you have a 60% win rate with a 2-to-1 reward to risk. Versus if you're trading counter trend, you are a 40% win rate going for 2-to-1. So maybe you probably should, based on those stats, you might want to be removing your 2-to-1 trades from your trading plan. They're costing you money, right? Or they're break even and then you're just paying commission. So it doesn't make sense. So you want to remove that. So I always want to be aware of what is the trend. Okay, am I sideways? Am I counter trend? Am I trading with the trend? For me, there is a 20% difference. I'll say this actually. There is a 10% difference from my trending to my sideways. There is a 10% difference win-loss versus trending versus sideways market. And then there's another 10% versus my counter trend. So in total, from trending to counter trend, there is a 20% difference for my type of trading. For me, it doesn't mean like this is exactly replicates for you. People ask me that, like, you know, what is your reward to risk, or what is your win loss? Everybody's different depending on what they ask from the market. Obviously, if you ask more from the market, you're going to have a smaller win loss. It's just obvious. It's common sense. You, instead of going for 2-to-1, you ask for 4-to-1. Well, you need prices to go more in your favor, so you're giving more time for prices to go against you, right? So does that make sense so far? Are you guys understanding this? Kind of talking about, you know, this is something that you guys could take for yourself. Maybe this sparks an interest for you to actually review your trading to see, is there a difference between my winners and my losers? You know, in my trending markets versus my counter trend markets? Because we're going to be talking about it throughout this whole thing, but, you know, the stages and things I recommend traders doing to get over certain hurdles. And that's actually a good thing I'm going to add to my questions tab. So I'm just referencing struggling trader to break even trader to profitable trader, the transition, like typically what I recommend and kind of what I see and what would I tell people, you know, from here to go from struggling to break even, and then what about from break even to profitable? Because I know a lot of people get stuck here, and that is obviously the transition. You don't usually go from struggling to instantly profitable. You go from struggling to break even, and then break even to profit. So going back here really quickly. Oh, this is good stuff. This is good stuff. So higher time frame drawing. I notice 4-hour time frame. Like I said, this could be used on monthly swing trading. You could do daily. You could do scalping and swing trading, whatever you want. Just usually, if you start adding more and more, there's going to be a little bit more hesitation, I would say, and information overload, because you might have like weekly uptrend sitting inside weekly supply, but daily sideways market, 4-hour downtrend sitting inside 1-hour demand. Like, you know, it could get very confusing. And so this is why I would tell people, start with one type of trading, either swing trading, day trading, scalping, or whatever. Trade that. Just focus on that. And if you think you can add more, then add more slowly. Okay. Okay. So higher time frame, drawing out sideways range. I can clearly see sellers are up here, buyers are down here. That is my higher time frame analysis. Clearly, buyers have stepped in once, twice, 3, 4, 5, 6, 6 times. So I'm kind of hoping, okay, well, last time I was down here, the last 6 times buyers have stepped in. Same thing up here. Last 6, 7 times sellers have stepped in. So if prices ever come back up here, I want to be looking for selling opportunities. We're just in a general sideways range. I probably don't want to be looking for selling opportunities. Why? Because like I just explained, on the higher time frame, we're in an area where buyers have exceeded sellers for the last 6 times. Sure, it could come to an end and break through, which it did. But hey, I'm not going to take that chance. I'm going to look for buying opportunities. So now that I know that I'm down here, I'm thinking, okay, great. I go down to my lower time frame, the 15-minute, and the same thing, I'm waiting for confirmation. These are videos that I've done many times in my playlist, tips playlist. I mean, throughout part 1, part 2, part 3, the course. But then I also talk about multiple time frame analysis, the confirmation entry. And I've started to redo some of these videos talking about confirmation, my exact trade setup. So they are in there about the confirmation trade setup, but let me go back to this. Prices inside my higher time frame demand. I just want to wait for evidence of buyers coming in. So typically what we're going to see is lower lows, lower highs, because we're inside higher time frame demand. On a smaller time frame, we are going to see prices going lower lows, lower highs, right? So I need to wait for the evidence of buyers to step in. And the same thing that we just talked about in the last trade review, I need to see 2-to-1 move away. I need to see price removing an opposing zone, and I need to see breaking momentum lines. Okay. And that's what I saw here. Okay. We had the lower lows, lower highs, lower lows, lower highs. We broke that momentum. We've removed this supply. We removed this supply zone here. Okay. And we have so we broke momentum. We actually broke momentum here, and we've removed those 2 zones. So we broke momentum, removed the zone, and we have a 2-to-1 move away. We scroll in those black candlesticks, very strong leg outs, right? Relative to the size of the base is like that size. We need the leg out being double the size, okay? Within the first 1 to maximum 3 candlesticks, we want that 2-to-1 move happening, okay? We don't want prices grinding up, taking 8 candlesticks to finally go 2-to-1. That doesn't really tell me that there's a significant imbalance in the market. So we got that, and I end up trading, waiting for the pullback, and I buy the pullback back down here with a pending limit. Unfortunately, it's a loss, and I have my stop loss kind of as a structure stop loss below down here. Okay, you're going to win some, you're going to lose some. Okay, any questions on that so far? We have one quick one to go over, but is there any question on that so far? 2 Davids. Frank?
No question.
Hey, Frank. What's that?
No question.
Oh, hey, Samuel, how's your curry, buddy?
It's going good. It's going good.
Did you send me that picture?
Where you said to send it to?
Send it to one of my social medias or my email, my friend.
Or I'll send it to you to the same email that you sent me.
Yeah.
Okay, I'll send it to your email.
The people want to know.
All right, no problem. Jamaican style.
All right, keep it up, my friend.
All right.
So on this one, this is just a regular. This is going to be like an hour and a half, 2 hours. So I understand if you can't make it for the whole thing, you'll come back and listen to the recording. And it's something I would recommend because there are very important topics that we might only talk about for briefly 2 minutes, just randomly in a trade review. That might not be in a question, or I might forget to cover in that question. And so that's why I'm stopping to make these points. So USD Swiss, there is a multiple time frame, and I'm going to show you a picture of this. These are typically the setups that I take. There are many different setups, different theories out there. So once again, I'm not saying this is the best, but the one time frame sequence is where we ignore the higher time frame, because people came to me early on and they were complaining, saying, I'm struggling to find a lot of trade setups. And I said, okay, well, why don't we take this idea to the back testing room and let's start back testing this 50 trades, and I'll get other people to back test and we can see how people come up with this. And if there's a big difference between multiple time frame and just a one time frame sequence. If we just remove completely the higher time frame, because people would say, I got a really good lower time frame setup, I got a good trade setup, but it's not inside a higher time frame and I can't take it. And so that's why we started to remove it. And this is actually a video that I did. I will have that in the description below if you guys are listening to this as a video. But it's called the one time frame trade sequence, and it's also the back test is when we come up with like a 75% win rate or something like that. Just removing completely the higher time frame, and it worked out really well. And now it's a staple trading setup in the setup that I trade, and I tell other people that it's okay to trade it as well in the private group. But there's certain things that we want to consider. I mean, if we're trading on a 4-hour time frame, like if you have a 4-hour, say you got monthly uptrend, weekly uptrend, daily uptrend, and you got this 4-hour sell setup, it's probably not a smart idea at trying to sell it. You know what I mean? That's where I would say, you know what, everything's in an uptrend higher than that. We probably don't want to be shorting. So for that reason, I don't want to be selling this as a one time frame sequence setup. But if it was inside, say, a weekly or a monthly supply, then sure, you know, it's inside monthly or higher time frame supply. So that's here on this setup that where's that? Here, you'll notice the same thing. Lots of drawings. USD Swiss, 4-hour time frame. Overall, we can kind of see 4-hour time frame. Just it's generally down. If you want to call it sideways, by all means, call it sideways. But I think we can all agree it's like definitely not in a hardcore uptrend, right? Daily's probably down based off of this 4-hour action that we can see. So we're kind of trading with this general downward pressure to the downside. And this same sell setup, let me scroll in. I could blow this up. Lots of jokes you can make with that one. Blow this one up. Okay, so rally-based drop supply. Does it have our three things? 2-to-1. Does it have a 2-to-1 move? Does it remove an opposing zone? And does it break momentum lines? Okay, broke our momentum line, higher highs, higher lows. I'm looking for pivot points. All right, I would never draw this as a higher high, higher low. That doesn't make sense for me. I'm looking for actual pivot points in the market, right? If you have a hard time viewing that, what I recommend is scrolling out. And so you can kind of get a better view of where the pivot points are. Let's see. There's more videos in the tips, obviously, going over that. And that's not a concept I'm here to break down. But here we go. Breaking momentum line, removing opposing zone, removing all these opposing zones, removing this. Ignore that. I wouldn't really call that an opposing zone. But we also have a 2-to-1 move out. First 1 to 3 candlesticks is going 1 to 3 move out, right? That's what I want to trade. And then price is coming back straight up, which I like. Okay. Those are the top 3 things that I'm going to have in every single lower time on my entry time frame. I'm always going to have that. On my higher time frame, I'm always going to have this and one of these, just always, right? And then also we want to be aware of what the trend is. Okay. Do you guys have any questions so far? Right? Price broke momentum line, price removed the opposing zone, created new lows, quality rally-based drop supply. We just talked about 3 criteria out of like 7 or 8 that we use, but those are the top 3 that I would recommend to make sure you always have. Like I said, there's a bunch of other things you could use. How long did it take prices to do that? Multiple time frame analysis. Is it fresh? How far did it go? Right? There's a bunch of other things. Are you using indicators? But these are the top 3 that I strongly recommend. And it's hands down going to make a difference in your trading. Every person I go back and I tell them in my private group, after they have 30 trades, their first 30 trades, we look at their trades and we're like, okay, these are the things I want you to check off. I give them a list of 7 things or 8 things. And I get them to go through and report back to me saying, hey, do you notice a difference between your winners and losers? What do you notice? And create a little tile box or a tick chart. And you're going to say, okay, 2-to-1 move, right? There's 2-to-1 move and no 2-to-1 move, right? We're just going to, you guys get the idea of what I'm trying to do here, right? And what I'll do is, okay, they go to a trade and they say, okay, this is a 2-to-1 move. Is it a winner or a loser? Okay, it's a winner. Okay, they go to the next one. Is it a 2-to-1 move? Yes, it is. It's a winner. Next one, it's a yes, it is. It's a loser. Next one, yes, it is. It's a loser, and so on and so on. And then if it's not a 2-to-1 move, they mark it in this box saying no. Is it a winner or loser? It's a loser. Is it a winner? And so on, right? And by the time you go through 30 trades, you're going to have, say, I'm just making up a number. You're going to have out of your total trades here, maybe this is like a 60% win rate going for 2-to-1. Let's just say 2-to-1. And this is like a 40% win rate. Okay, well, that should clearly tell you that you should be probably removing this from your trading setup, right? And we say, okay, this is one of the criteria now we need for all your trades going forward. Now we test the next thing, and then the next thing, and the next thing, right? Trying to figure out what setup is making you money and not making you money, okay? You guys good on that? That's good stuff right there. Solid stuff. Okay, let's have a look at, we've got a bunch of questions to go over too. Good thing we started this 15 minutes early. But I'm going to look at some of people's trade reviews. And based off of what you've heard so far, I'm going to be referencing here and so on and so on. I left people's names out because I wasn't sure if they wanted to be included and so on and so on. All right. So this was a trade, and this is one of my pet peeves. If somebody ever came to me and posted this in the private group, I wouldn't even look at this trade. And I tell you guys this every time I ask for somebody. I always tell you guys can reach out to me anytime on social media, Facebook, Twitter, Instagram, on at Moneyball Austin, right? It's in the description of all my YouTube videos. And ask me anything. You guys can ask any questions about trading, about life if you really want to, about travel, any general trading questions or methodology questions or tips that I recommend. I have no problem, right? If somebody says they're having a problem with the trading strategy or whatever, and I say, please send me a trade review. 9 times out of 10, they're sending me a picture like this, where it's completely blank, or what they're doing is they're literally taking a photo of their computer and their screen, and they're like, review my trade, please. It's like, what do you want me to do this? You know, I can't learn anything from this. And I kid you not, 9 times out of 10, these are people's trade reviews. How many people we got in here? We got in this call right here, right now, 16. If you guys were all interns for a trading analysis desk, and at the end of the month, I'm only going to hire 1 or 2 of you. And day 1, I asked you guys, okay, for your homework, I want you guys to come back tomorrow with the best trade setup, trade idea that you have for the next 30 days. Stock, crypto, Forex, whatever market out there, right? Futures, whatever you want, just come back with the best setup that you think is going to be a good performing trade setup and why. And you come back to me and you put this on my desk and you say sell here, and it's a picture of pound USD on the 15-minute time frame. Dude, I'm not even gonna, I have no idea why you're looking at this. What is your top-down analysis? What is the fundamental analysis? Why are you looking to short this? There's nothing that I can learn from this to understand why you are trading this. I have to think about it myself. I think, okay, why is he looking at this? Like, I don't know. I have to put the puzzle together, and then I sit here for 10 minutes rambling on about somebody's trade setup, and I'm not trying to dig at this guy. Just good criticism. And it's something that he needs to do, is start journaling his trades properly. I'm not saying I have the best way to journal my trades. but there's a lot that you can actually pull from my trade setups, from my trade reviews, because of what I mentioned here on the chart. I add both higher time frame and the lower time frame. I draw out my higher time frame zones. I explain, hey, price is in a sideways market. Price is low on the range for demand. I am looking for buying opportunities, right? I understand. Sure, if I was presenting this to someone else, I could go on to explain like, hey, the last 6 times it's been respected. So now that it's coming in for the 7th time, I'm looking for buying opportunities. He can get why I'm looking for buying opportunities, right? Sure, I could have added something based off of fundamental, like I don't know, Dubai oil company or something like that is coming out with really good news or something like that. I don't know, right? But my point is, you guys can get a sense of why I am looking for buying or selling opportunities. Okay, why is he actually buying here at this demand? Oh, well, according to him, price is breaking momentum. It's removing an opposing zone. It's removing he's got a drop-based rally, 15-minute demand zone created. Main news, CPI numbers plus the Silicon Valley Bank collapse from last week or 2 weeks ago, right? Investors are running into safe haven assets and removing their money from bonds, stocks, dollars, and putting it into gold and silver, right? So I thought in my head, hey, money's going to move into the commodity, right? That's what I was thinking, right? Clearly I was wrong. Oil absolutely just got whacked. So I was wrong on this, but do you guys get a sense of why I'm actually buying this? Does that make sense, or am I completely out to lunch? Colby, I know you text this or you messaged this and it was 8 minutes ago, so I don't really know what you're referencing. But yeah, you're following me. You're following me. Yeah, sounds good. So you understand of why I'm looking for buys or sells. Here, when I look at these trades, they're nothing. Like I don't understand why he's buying or selling. What's his top-down analysis? I understand if you're coming to me from my trade reviews and watching my videos, I get the system that you are trying to trade and kind of that, and I can base it off of that and give you tips of what I recommend. And it's usually talking about the same things that I've mentioned, talking about how to properly journal, because there's so much you can learn. Why is journaling your trades so important like this? Because like I just explained throughout this video or this meeting, is that we can review, hey, what's my trending versus sideways markets? What's my counter trend versus trending markets? What's my opposing pivot point zones and a 2-to-1 imbalance versus my no opposing pivot point zones or no 2-to-1 imbalance? You know what I mean? Clean arrival versus poor arrival, news versus bad news. Like there's so much you can pull from that. And if you look back 6 months from here and look at this trade, I don't know for sure. This is your trade setup, so this is your trading. You could know what you're talking about or remember, but if this is my trade, I really couldn't pull much from this information. Maybe your analysis has changed to where you would consider this a downtrend, while prior 6 months ago you were considering it an uptrend. So you got to go based off your information of what you were knowing then, and now compare it to now what you're changing. You know what I mean? So strongly recommend you guys start filling out information. I know that was a question, is what do you recommend us journaling throughout the trades or whatever? As much as you can, explain the trade setup. So if you were to give your trade review to somebody else, they can understand why you're buying or selling. Trend, kind of the top-down analysis, how you manage the trade. Was it a winner or a loser, right? And so on and so on. Okay, I gotta mute. I don't know, it's Sega, Mark, or Abdul. I gotta mute you because your mic's going. There we go. Okay. Let me get a quick water break, ladies and gentlemen. What is it, 12:30? 12:12, it's 2:30 here. Freezing cold here in Cusco, Peru. Going from the tropics for the last 2 years, all of a sudden to the mountains, high elevation. It's takes a toll on your breathing too, because you're high elevation, so you suck in half of the oxygen you normally do from sea level, and plus you're in the mountains, so I'm in pants and socks and heater on and everything. Yeah, it's cold. It's nippy out here. Here coming to you from Denmark. All right. Where are you guys coming from, by the way? Can I get a roll call where you guys are coming from? Denmark, UK? I'll read them out in a minute. So let's get into this trade review. Pound USD 15-minute. So one thing I do like what he's doing here, or actually one more comment. So the first comment was, we're just going to go JO, journal your trade. The second thing I'm going to make on this higher time frame is it's one of my pet peeves is when people focus on the micro instead of like the macro here, is that they start hyper focusing into the charts and they start drawing out every little zone. And you only have one zone out here, but they scroll in and they just focus on like one candlestick of the base. In my opinion, this is the way that you want to draw the base, the whole base, or include this to be your zone. And personally, I would include this because it's the whole general supply. I'm sure it's probably a pretty nice 30-minute supply as well. Like this is a 15-minute. So if we go up to a 30-minute, it'd be pretty cool if we get I'm sure it'd be a pretty good 30-minute rally-based drop, right? Every time you go down to a smaller time frame, you're going to see more candlesticks, right? So if we go to a larger time frame, this is going to be less candlesticks, and it's still going to be a pivot point, right? So one of my pet peeves, like I said, is when people hyper-focus zones. And let's just go to one of the charts right now. Let's see. I know Fed rates was coming out today. How'd that go? Gold continued to rally. Nice. So let's not look at what's been going on right this second because it's kind of odd because Fed rates just came out and Jerome Powell is, I'm not sure, he's probably done his speaking. And everybody's anticipating what's kind of going on because everybody wants to know what his opinion is and going forward because the banking collapse and the crisis. And so he's really the first one to talk. And then we got the Euro guys coming out tomorrow and the Swiss coming out tomorrow as well. Or I think it's the pound. Euro was last week. I think it's the pound tomorrow. Okay, so like when people, let's just go to a 30-minute chart. It's one of my pet peeves is when people will dive in, like say if we were going to trade at this demand zone and people hyper focus on just like this one base and they say that's the demand. All right, we're not trying to do that. And the way that I explain it in those tips videos is when we're trying to look for areas of supply and demand, we're looking for a base camp, right? Not just one base, not just one camp in the base. I mean, if you imagine, I don't know, the army, if you have an army camp, and I'm sure everybody can relate, not everybody, but some people, but if you have a base camp of an army, right, you have one hut here. You ever see in like Game of Thrones or these army videos, they have like 50 different huts, right? And then they probably don't have the king general over here on the outside because that's going to make them vulnerable. What they do is they have them in the inside, right? Kind of in the middle, I'm guessing. I mean, that's how I would set up my camp. Right? Last thing, if I was the commander and I was the guy in charge, I would not want myself being on the outside, right on the edge. I'd probably want myself being in the middle. Maybe I'm wrong. I don't know, but that's what I'm thinking. What is the base? The base, if you reference people, oh, they're at the base. This is the base, right? Right. And then obviously inside the base, there's, you know, the Rangers, the guys with swords, and you got the commander, right? But we reference the base, okay? And that's what we're trying to do. We're just trying to find the meat of the orders of where the buyers and sellers are coming in. So when I go back and look at this here, it's a problem that I see a lot of people hand in, even homework in the private group, is they focus on just one little candlestick, like here. Instead, focus on the general area. Now, I'm not saying draw out your zone like this. I'm not saying that, but just get a general sense. You know, don't nitpick the zone. That's usually what I say. Don't nitpick it. If I'm going to call this area demand, I'm not going to call that demand, all right? I'm going to call the whole area demand. Do you guys get a sense for what I mean? I'm not going to call just this area being the supply, that one base. I'm going to call this area. It's going to be basically the same, but you get a feel for what I mean, you know? Right? 2-to-1 imbalances, removing opposing zones, and breaking momentum lines ideally, if you can. But always making sure they have 2-to-1 move aways, right? Do you guys kind of get what I'm saying here? Does that make sense? Cool. We'll probably see a little bit more examples of that later, but we'll come back to that. So in this idea, I agree. I think that's a general good sense of where you want to be looking for selling opportunities. I think we have a lower low, lower high type of, trend. We're in a downtrend. We're coming back up into an area of where sellers exceeded buyers. Okay. So I agree. This is probably an area where I would definitely want to be looking for selling opportunities if prices come back up into that area of supply. So prices come back up into that area of supply. What are we doing, guys? Chow mein, what's his face? Curry man, chicken curry. Is that him?
Donovan.
Yeah. Does that make sense? I'm not sure what I asked. I was forgetting your name.
Donovan. What did you ask?
To be honest, I don't know. I forgot because I was thinking about what your name was.
Donovan.
Okay. I really like chicken curry.
Okay.
It's okay. It's a little racist, but chicken curry. Is it
Curry
just chicken
chicken.
curry or regular curry?
We say curry chicken.
Curry. Okay. Thank you. Curry chicken. There we go. Okay. Would you agree we're in a downtrend? We're kind of looking for selling opportunities. Would you agree that this is a smart idea or a bad idea? It's up to you completely.
I agree.
Okay. Yeah, I agree. So I agree going down to a smaller time frame and waiting for selling opportunities. Now, one thing that I noticed, the way that he drew his zone here, you can see that he drew his zone very tight. That's not something I would recommend. And then he continued to look for selling opportunities after prices removed it. For new traders, I would personally tell them once prices remove your zone on your higher time frame, just don't trade it because you open yourself up to say, is it a liquidity search? Is it a stop hunt search? At what point is it gone too far? You open yourself up to emotional decisions. Okay. So I would personally recommend for new traders, if it breaks your zone, skip it and move on. Unless you have some type of really good, concrete, mechanical way of trading that will stop you from making an emotional decision, then okay, that's great. But because it broke it based off of your zone that you drew, this guy, I would ignore it selling this thing. Okay, so that's the first thing. But if we take the way that I drew it, I think it's fine. Okay. What I see personally is I don't want to criticize your trade setup because maybe this is how you trade, but I wouldn't take it for the following reason. I don't see my pivot points being removed in my opposing zone, my momentum line being broken, and my pivot point zones being removed. You know what I mean? So for that reason, I wouldn't be trading this trade setup. But I understand if somebody did, I would tell them just make sure you do accumulate 20 to 30 trades to see how this trade setup works out. Because this was one of the trades that we could, I'm not going to get too into it, but we have confirmation 1 here, top left. We kind of call this confirmation 2.0. But this is like a low quality, in my opinion, confirmation 2.0. But I say it makes sense of, I understand why you're looking for shorts. Like here, like we broke the momentum opposing zone, right? But we're continuing to go lower lows and lower highs. Usually we want that pullback to happen into that rally base drop, but instead we didn't get it and we continued this trend to the downside. So he's now looking to trade that as his pullback. I understand it, but I'm not personally a big fan. Okay. Any questions on that so far? And that would be my comment regarding that trade. On this next one, pound USD 15 minute. Once again, I actually like his higher time frame supply. He's in a downtrend. He is reacting off of supply. What else? And it's a tradable zone as well. He's kind of got this, imbalance correction type of play going. So I like it. Imbalance, price pulling back into a correction. I like these type of trades because it just makes you feel confident in your trade setup. We can talk about that later about how to build confidence and all that stuff. But definitely when you see your higher time frame kind of going like this behind you, you feel good. Like, oh, okay, it's making lower lows, lower highs. It's like when I was buying in that sideways range. And I'm like, hey, this bottom of the range is held 6 times. I feel pretty good buying, right? Doesn't mean it's going to be holding, right? People get upset by that after 1 or 2 losing trades. You really shouldn't get upset. So I like this idea. I agree, looking for selling opportunities. We go down to his lower time frame, and once again, I personally, this doesn't make it a bad trade setup. I just don't see the setup that I like, okay? I don't see the setup that I like, as in the opposing pivot point zones, the momentum breaking and all that. So I wouldn't take a trade like this, but I'm not going to stop him. I'm always going to encourage him to try different trade setups. But hopefully, if he's not having success with this, he then tries my approach. I'm never going to sit here and say, stop doing this, because I don't have the stats on this. All right, maybe it works really good. I don't know, okay? But this zone doesn't really jump out to me to be a very impactful zone, because it's not having that 2-to-1 imbalance. It's not really removing opposing zones. It's not breaking momentum lines. I'm not a big fan. Okay, but I agree with this higher time frame. It makes a lot of sense. Quick conversation we could get into. We didn't talk about set and forget, but that is something we could. The only time, because actually that is a question that somebody did ask, but I'm going to answer it here and maybe later. One of the questions is, what about set and forgets? What are their criteria? Kind of the same thing, but the only time I recommend setting and forgetting is when you're trading, number one, with your higher time frame trend, and number two, you're trading at the extreme of the higher time frame zone, and I guess number three, as long as there's a lower time frame strong quality zone at the extreme. And the best example that I can give that happened recently was oil. In the meeting, we were talking about this 4-hour time frame. We were saying, what were we saying? I think it was this area of supply. Looking at there. Oh, we'll see. Let's remove that. Okay, that's our next 4-hour supply. So if I was scalping or day trading, like, sure, I'd be looking for shorts in here. Yeah, right. You could look for shorts in here, maybe in here as well. A little bit aggressive because it's hasn't really accomplished that much. Now we are looking for, I think 15-minute. Yeah, 15-minute entry time frame would be the setup that you'd be trading. Lower time frame, we mentioned that at the start of the meeting. 4-hour, 15, 4-hour, 5-minute. Like I said, there's no magical time frame, but in this case, you'd be trading at the extreme of the higher time frame zone. Okay, and ideally, you want 2-to-1 imbalances, you want breaking momentums, you want zones being removed. If prices are just grinding down, like up here, if it's just grinding down slowly, then it's not something I would trade at. It's always going to be higher time frame, trending market, trading at the extreme of the higher time frame, and making sure the lower time frame is a good quality zone. Okay, I wouldn't be trading at fourthly, I would not be trading at drop-based drops or rally-based rallies. I'd be trading at the reversal patterns, rally-based drops, and drop-based rallies. Okay, just those are statistically better. That's been proven. I've reviewed all my trades. I've asked many other traders to review their trades to see, is there a difference between our rally-based rallies, drop-based. So in case you guys don't know, there is a difference. Like, okay, so this would be drop-based drop, drop-based drop, rally-based drop, okay, and then drop-based rally. Oh, we need a rally-based rally. Let's just grab this, rally-based rally, okay? There is a difference between this setup, the drop-based rally, and the rally-based drop versus, the rally drop-based drop. You guys know what I mean, right? The continuation patterns, as they're known, all right? The reversal patterns, these ones are typically a lot better. Statistically, they work a lot better, okay? So those are the ones I recommend. Okay, that was just a quick side note. Like I said, we are going to be having side note conversations. So let's move on to the next one. Pound USD 1-minute time frame. Once again, I think he's got good higher time frame zones, and this is some of the problems I see a lot of traders do. They have a really good higher time frame, but a poor lower time frame, or they have a really good lower time frame, but a poor higher time frame. Right. And so if you're going to be trading higher time frame, I strongly recommend getting both. In fact, it's like needed, unless you're just trading the single time frame. But it will work better if you have higher time frame as well. So when I look at this, It's not the greatest, but I agree. I think it's a good little, I don't know what time frame this is, 15-minute supply. Yeah, I think it's a good zone. He's got a respectable first 3 candlestick leg out. It looks like it just went 2-to-1. So you know what? That's good. I'll give it to him. I don't like the momentum line. I'm not going to comment on it, but I don't agree with his momentum line. I would personally would have had like this as my old momentum line, connecting it to like here, here, and here. I like something like that zone, as that has broken momentum, removed zones, and it's a nice imbalance. But this one that he's trading at, it did take 3 candlesticks, which is the maximum we need. All right, we don't want to go 4 candlesticks for it to go 2-to-1. That really doesn't tell me that there's a significant imbalance. We might have removed some type of chop crap demand, right? Poor quality demand, sure, we removed it, but it's not like it's a very good. This is really the good demand that stands out to me. That one at least had a strong imbalance. It's been respected once, and it's been respected twice. So that's really the demand I would want to see being removed. But yes, that would not stop me from entering a trade on a lower time frame. In my opinion, the 15-minute is a pretty low time frame. I would look to use either the 30-minute or the 1 hour as the higher time frame, and personally avoid the 15-minute. I personally don't ever use the 15-minute as a higher time frame. The maximum I'll use, or the lowest I should say, is the 30-minute or the 1 hour. Those are the 2 lowest time frames that I'll use for the highest time frame. If that makes sense. Prices then came up into his higher time frame supply, and he's looking for selling opportunities. Great, I like it. Let's look for shorts. Do we see any evidence really coming into the market? I don't really see it. I don't like this. I hate that as a momentum that he used. I think that's, I wouldn't even say very short term momentum. Like it's very bad. I think the general sense, if this was the trend, if you showed me the chart like this, you guys can see that to the right. I hope you can. I'm not sure if you can. But if I saw the chart like this, and I'm looking at all this stuff, you know, over here and over here, just to the left of it, I just don't, based off of the start of this conversation, can you guys please answer this? Does that really look like selling coming into the market? We did get a 2-to-1 move away, but did we really remove opposing zones, breaking momentum line, pivot point zones, and all that? Did we? If you think so, please let me know, right? So we could spend maybe 1 more minute, but I think it's a little bit obvious. You guys know what I mean? Curry goat is the best. Oh, I forgot to name where you guys are coming from, by the way. South Africa, Florida South, Cali, Kansas City. Cool, cool. Tanzania. Cool, cool. Does that make sense? You guys got to talk to me. I don't know if I'm losing you guys. All right. Mason, thank you. I appreciate that. You guys can always jump on the mic as well if you need to. That's how you get the best learning experience, because you can talk to me directly. Okay. So yeah, I would avoid that trade for that reason. Okay. So there's certain things that I like and certain things I don't like. And here on this one, what happened here? This is another example, pound USD 15-minute. I think he might have forgot to include his lower time frame, or maybe I forgot to add it. That's probably my bad. Here's what I referenced when I first started looking at his homework, guys. Remember when I said don't focus on the micro, focus kind of more on the macro here? Look how he's drawing out his 15-minute zone here. He's just like tightening up his zone so much, right? You know, we all know tight is right? I think the guys know that, but when it comes to zones, you know, give yourself a little breathing room, all right? We want a good size base. So we want the size of the distal line kind of going up to the top of the wicks. I personally, some people, let me redraw this. Some people might go like this, and I wouldn't mark it wrong. Some people might go like that and say that's their proximal line, the meat of the buy orders or sell orders. In this case, like that's where the base is. You're not wrong. Just personally, what I would do is I try to get closer to the imbalance of where it originated from, right? Where did prices start to leave? This is, you know, we're not getting into, you know, the whole methodology of, you know, what is supply and demand and all that. There are great videos on my playlist that cover all this stuff. I'm here to answer questions and common mistakes that I see people making. I would cut it in half. It's a very wide base. You don't usually ever see me drawing out bases that wide. And usually what I tell people going through the homework, I mention, like, if I fail them, which I just say, hand in the homework again. But before you do that, reread the book, go over the course material, and listen to one of these recordings that we made, and don't focus, but try to focus on how, not what zones are on my watch list, or if it's a good trade or bad trade, or what the trade review is, but how am I drawing out the zones, right? I'm not widening the base to be a massive base, or I'm not pinpointing the base to be like, okay, that is my supply zone right there. I'm just trying to get that general meet in the middle, that have a good, strong move away. That's a tradable zone. All right. And that's how I would draw. I would draw my proximal line just a little bit tighter. I mean, where you have your proximal line is that's exactly where I would have it, but your distal line could definitely be moved up a bit. Okay. That's how I would draw. You can always, usually if it's a really wide base like this, you can usually go up one time frame and tighten it up just to see what it looks like. If this is 15-minute, you can go to the 30-minute and you could probably just get a better sense there, but that's how I would draw it. Okay. There's other examples that we might get into. No, not really. Maybe. All right. Let's continue.
Austin, I have a question. This is
yes.
Donovan.
Talk to me, my friend.
Okay, I noticed you mostly looking on your 4 hour. Is that your higher time frame, or do you go higher than the 4 hour as your higher time frame? They say monthly, weekly, daily.
That is a very good question. I will do a little bit of everything, but over the last 2 years, when I did my review, every 6 months to a year, every 6 months and year, and for the last 2 years, gold, oil, and the NASDAQ has been my best performing year after year. All right. And when I was last year, at the start of last year, I told myself, like, oh, okay, this was my first, when I was reviewing, I was like, I did really well on gold, oil, silver, and NASDAQ. And I'm like, I'm just going to focus on that. And last year, 2022, I performed really well with just trading those. And then a lot of the other currencies and stocks, they hindered my performance. And so when I reviewed my trading from last year, 2022, I noticed again, same thing, gold, silver, oil, NASDAQ was my best performing trading assets, right? And they were all on the lower time frames, typically. And so that's why for this year, I've been really focusing on just the lower time frames and mainly gold, silver.
When you
oil.
say lower time frame, 15-minute, 30-minute, 4 hour?
Yeah. I realize I kind of deviated from your question. Sometimes I do that when I notice there's a really good point I want to make. And I know to come back. I know to circle back.
I have a reason why I'm asking you the question, because I've been trading for 5 years now, and I'm kind of struggling back and forth still. And I noticed that I'm starting from my monthly time frame and doing my breakdowns. But my trade has been up and down. I can't say I'm profitable, but I'm like at break even right now, or I'm getting to break even. Okay. And that's mostly why I am glad you did this. It's mostly because it's over trading. That's one I'm still struggling with that.
That's a good one. How many trades are you taking a month?
Too much.
Well, how many trades?
Maybe 70, 80 trades. Too much.
Holy smokes, your broker must love you for those commissions, eh?
I've been doing most of the challenges. I've passed a lot of them and I've lost the accounts. So it's my risk management is what I'm struggling with.
So there's many ways that we could take this conversation right here. And this is
but I'm not, I don't want to disrupt your teaching. No. So I'm sorry.
Is this chicken curry?
Yeah.
Oh, my friend. You're the highlight of this meeting, my friend. Chicken curry.
I don't want to disrupt. I know you're teaching, so I didn't know.
No. This meeting is for you guys. That's what I told you guys, for you guys to have questions and all that. That's no problem. Maybe we do this every 6 months or something like that. I mean, we do this every Wednesday and Sunday. The Wednesday meetings are the Wednesday trade reviews, where we look at the trade reviews and answer questions. But it's only 45 minutes to an hour.
Yeah, a lot of
And,
guys are not doing this. So I appreciate what you're doing, man.
Yeah. No problem. Okay. Anyways, let's get back on topic here because you got a lot. Number one thing I did want to mention is I get a lot of people that reach out to me, and even one recently from earlier this week. In the middle of he got a funded challenge. He passed it, but he's struggling, and he's about to lose it. And I hear people all the time saying they failed the challenge so many times, or they're going to take a challenge. Do not take the challenge, a trading challenge, a funded challenge, unless you are already consistently profitable and you can prove to yourself that you are consistently profitable. By having at least 2 to 3 months then of being profitable on a small live account or a demo account. Personally, I recommend live because you're actually going to have real money at risk and you'll feel the highs and lows of trading real money and winning and losing. So I'd recommend trading live account. Doesn't have to be much, has $10, $20 a trade, maybe $5. But do not take those funded challenges unless you are already profitable. Because those guys will feed. You can't cast shade towards these guys because those prop firm challenges, they probably make 90%, 80 to 90% of their capital, their money from people that fail the challenges, and you can't hate on them. They do have expenses. They do have liabilities. They are offering you the opportunity to trade $50,000, $200,000, $2 million of a funded account. Right. So they have to have some way of separating the good traders and the bad traders. So this is why they ask people to go through this challenge and to put up money to, put up some stake to make it sure that they're serious and they can actually do some real paperwork because they do have expenses and they have liabilities. So they've got to have some type of way to filter out the bad traders and the good traders. Right. But 90% of their profits, 80% are probably coming from losing traders. So that's the first thing is do not take those challenges unless you are already profitable. Okay. Second thing is Chicken Curry. You got to help me with the second part of your question because I know I do ramble sometimes, but they're important rambling talking points. You are struggling with risk management. What part of risk management? It's a big problem. It's so easy. I don't understand why people have problems with risk management. I know what my answer is going to be, but I want to hear your story.
I think it's more like revenge trading that I wouldn't say revenge trading because like say I do my trade setup, do my planning for my next day's trade. If I lose that trade, most of the time I'm in profit, and if I lose that trade.
Okay, hold on, I gotta mute these people. Talk to me.
Yeah. And if I lose that trade, I tend to get back to start revenge trading. And that's when I end up like maybe losing 2-3% for the day when I should have only lost 1%.
Are you revenge trading as in you're risking, say your normal risk is 1%, but then you start going 2 to 3% risk?
Yes.
Why are you doing that?
That's something I'm working on by myself,
so
and I think working on it by myself is not working.
But it's so simple. Do not risk more than 1 to 2% per trade. Just be consistent with it.
It is, and I think that's what's stopping me from being a profitable trader. Because I trade the same system you trade.
Listen, my friend, the only way you're going to become consistently profitable if you consistently take the same trade, you have the same consistently have the top-down analysis, you consistently have the same risk management, trade management too. Consistency, right? The same thing over and over again. Yeah. There's a reason why all my trade setups look the exact same. Right?
I realize that.
Slight variation, but they look exactly the same. Right?
Yeah.
Risk management. This is where I would say you say like you're a break-even trader or whatever. Just if you cannot go 10 to 20 trades without just trading 1%, that's all I ask you. Please report back to me. All right.
I will.
Saying I risk 1%. Just please 1% for 15 to 20 trades. Okay. I don't want you to revenge trade.
Should I only take one trade, one position? Because one of the thing I like to twin trade. and it's something I realizing it's not working.
You want to take one trade?
Twin trade. On that trade, I have two positions.
You
Risking-
trade how? Oh, okay. Okay. What do you want to do? You
I
split your
realize-
position.
Huh? I still try to stay within that one position at 1% if I'm twin trading.
Okay, yeah. If you're going to split your position up, like this is a common question that people get. It's a good question too, but it's not actually common. I did a video on this talking about trade management and it's really trade management, entries and take profits, about what's the best way for you to take profit, trade management, and enter your trade and stop loss placement. That's a video I made in that tips playlist. And if you want to split your order into say 1% risk, but have 2 take profits, so you're going to have to say you're going to have to take 2 positions, 0.5% and 0.5%. That's cool. Let's do it. But just make sure you're consistent at it, please. Okay.
Okay.
That's all I'm asking, because it's not like this is going to flip the switch and say you're automatic, like you're some holy grail system and say you're making money.
No. I've been doing it long enough.
Get consistent results without being consistent.
Yes.
Right? So if you can consistently take the same trade setup, then we can review to see what's actually wrong and what's going right, you know? You understand what I mean?
Got you.
So I asked you, if you want to take 1% risk and just 1 take profit, personally, I think it's easier because it's less emotional decision.
Yes.
Right? I think that's easier, and you seem like a very emotional guy. But
I'm actually not. I'm actually not.
Revenge trading. No, of course not. No, of course not. You did tell me that you do revenge trade slightly a bit, and you risk too much. So clearly, you have a problem with consistently. I
guess it's not accepting the loss. I'm not accepting my losses. You know.
Okay, but all I ask, you're taking 78 trades, 70, 80 a month. That's a lot. Can you please trade maximum 2 positions a day for me?
Okay.
I don't care if you lost 2 of them and the third one's some magical trade setup. Just maximum 2 positions. I just want to put a cap on the amount of trades, because there's also something that you could do is, where are your best trades coming from? Are they happening earlier in the day or later in the day, or also?
Well, I only trade the London session. I trade the German DAX. I only trade 1 pair.
Have you been okay? That's fine. That's fine. How do you swing trade trading 1 pair? That's incredible.
No, I don't swing trade. Trade. No, I don't. I just intraday. I just trade the session, London session from 2 a.m.
So what's your
to
trade
4
setup? Really?
And
you get 78 trades trading 1 market?
Because I tell you that I'm revenge trading. I keep jumping in and out. I'm not waiting for my setup. You see how you wait for your setup? I'm not waiting for it.
Well, clearly you're not.
I really should have 1 to 2 trade a week based on my system.
Okay, 1 or 2 a week. That's a little bit shy if you're trading 1 pair. But hey, maybe not. Maybe not. I don't know. That's just my opinion. Listen to me. That's pretty incredible to tell me that you should only be trading 1 to 2 a week, but then you tell me you take 80 trades a month. Holy smokes! Holy smokes!
1 to 2 is kind of pushing it, but I would say based on my system, I really shouldn't be doing no more than 4 or 5 trades a week. Really?
Yeah. Okay. I think that's fair. So I'm going to ask you. Let's get back on topic here so we can wrap this up. Okay. Is your revenge trading happening after your first trade?
Yes.
All right. It's a losing trade, obviously, right?
Yeah, because I'll see going to profit and then and come back and stop me out, or allow it to stop me out.
What do you notice good about your trading? Like, what do you notice when you're good?
When I'm good.
Yeah, like when you're making money, you're revenge trading. So, like, is your
when I only take 1 trade. When I only take 1 or 2
so only take 1 trade. All right, put a cap. I'm saying maximum 2 a day. All right.
Yeah, when I only take 1 or 2 for the day, it's a beautiful day, easy day.
Okay. Listen, when I tell people to have a trading journaling plan, it sounds like you have a trade setup, which is great. I
don't have a plan. I don't have a trading plan. I still don't have one after all this time.
Okay, you have a setup though, right? It's your kind of your trading plan. But
I have a setup.
Okay, you have a setup. It's basically your kind of your trading plan. Now, obviously, you got to have the same consistency regarding your trade management and all that. Okay.
That is where I'm struggling. My
Okay.
trade
Well,
management and profit taking.
like we just talked about, this is why I said either have two take profits or one. If you are going to have two, you're going to open yourself up to emotional decisions. For right now, I would personally tell you just get out at either 2-1, 3-1, or whatever you want, all in, all out. Because what we can do after those 20 or 30 trades is we can look back and say, what would have happened if we took two positions and however we manage the trade? You know, if like you sit there and say, I like to go for, do you have a way for your second or your third take profit, or are you just guessing?
Basically, I try to close everything out before I go back, because I get up at 2 a.m. I'm back in bed like
you're just throwing darts at the board, which is fine, but you have no mechanical way of taking profit. You're just getting out whenever you feel like kind of getting out. That's kind of the same.
Yeah, and I do leave a lot on the table when I do.
Of course, that's what you're always going to leave money out on the table.
I don't know. It's because I work a 9 to 5, so I really don't like to hold trades and go to work.
Okay, let's wrap it up. What I want from you for the next 15 trades is, you know what you got to do: 1 to maximum 2 trades, right?
Okay.
1 to 2 maximum a day. Same risk, and I want you all in, all out at 2-1 take profit. I don't care, or 1.5. I don't care. Maximum.
Okay.
You don't take the trade if you're like, I'm going to get out at 1-1. No, you don't take the trade. 2-1 every single trade. Okay. From there, you can review, or I can give you tips to how to review to say, what can we do to get better? What can we change to make more money?
So I just send you a message after the next 10, 20 trades.
That's 20 trades. 10 is not enough. Okay.
All right. Thank you.
All right. No problem. Whew. Raising my blood pressure.
I know. I raised mine too.
It's okay. All right. Let's get back into it. It's okay. You know, that advice was free. Some people just come and they want my advice. And, you know, some people, that's good. There was one guy, Monty. He's now a funded trader. I think he's managing 250K now as a stock trader. But he had the same problem. He would revenge trade after his losing trade. And so we said, after your second losing trade, you're done trading for the day, right? Just that one simple rule and one thing we added regarding the trade setup that he took from me, it changed his trading completely, you know? But that's good. You know, some people are like that, and they need somebody just to help them and guide them and give them a plan. You know what? If that saves them 6 months, 5 months, or a year, that's great. Money well invested. You just got that free, my friend. Okay, so euro pound. This is a trade from somebody in the private group. I thought I would just showcase it because I think it's a good top-down analysis, and then we'll get to a lot of these questions. Please tell me I'm still recording. Thank gosh, I'm not sure if Zoom cuts off the recording after some time. Okay, euro pound 4-hour time frame. Starting with this higher time frame, that's cool. If he doesn't, that's cool as well. He doesn't need to. He's drawing out his zones. Number one, I like his higher time frame demand from down here. Why? He's got a 2-1 move. He broke momentum. He also removes some type of area of crappy little demand. So we're going to go with that. So that's a pretty good demand. I agree. It's good. I would definitely want to be looking for buying opportunities in there as well. Maybe it's a swing trade. I don't know. I'm not going to look because we're looking at this trade review. He then had this supply zone up here. Great. I also agree. Very nice rally-based drop supply. Very strong and balanced to the downside. Once again, 2-1. Removes an opposing demand from down here. It's continuing the trend to the downside. Fantastic. I agree. I would want to be looking for sells in there as well. One of the big problems I see people is they always they go in there and they're like, oh, it's inside supply. I'm just going to push sell, right? There's no top-down analysis. It's a poor quality zone. They're trading counter trend. The amount of times that I see people just let's just imagine like this. Okay, well, I don't know. Well, how prices are just rallying up nonstop over here to the 5-minute chart. They're trying to trade 5-minute drop-based drops over here and over here to the left. It doesn't really work. You're trading counter trend. You're trying to catch a falling knife or a rising knife like that. Wait for the confirmation, right? That's a big mistake that I see people making. As long as you're trading inside higher time frame zones, you should be relatively good and you have the criteria. All right, and then he's also got this supply zone up here as well. All these zones, supply and demand, good, strong imbalances, tradable zones, fantastic, okay? So prices came up into his higher time frame supply. He said trend is sideways, okay, that's great. And he's looking for selling opportunities. Okay, so he goes down to his lower time frame now, and he's waiting for selling opportunities. Let's just say, for example, if prices were currently outside of his zone, maybe he wants to set an alert, or maybe he has like, because I know some people come to me and they're like, how do you manage a bunch of charts or something? Like, let's just say pound yen, for example. Restart chart. If this is a zone that I'm looking to trade at, I will keep it unmarked until prices come up and test it. And until prices come up in like in here and actually touch it, okay, now I will flag it some color. In this case, let's just call it, I don't know, orange, whatever. Could be red, whatever. If there's a trade setup, maybe I want to mark it green. You know, this just helps me organize so I don't have to consistently scan through 50 different markets if you are trading 50 different markets. Everybody has their own little top down of how they want to manage that. But I just know if they're flagged, that means they're currently inside higher time frame zones based off of whatever time frame I'm using, you know. And maybe, for example, you know, pound Swiss, maybe this is a trade setup that I'm looking at, right? In this case, this was one with my daily supply up here. Once again, 2-to-1 tradable zone, price coming back up into the zone. Smaller time frame was like the 1 hour or 4 hour. And then this was the supply that we were waiting for the pullback. Never came back yet. Okay. But maybe that I want to flag that green because it's a waiting setup. You know what I mean? Maybe pound CAD is nothing, so I don't have it flagged. Maybe wheat is, I mean, I guess yesterday probably. Yeah, yesterday it was sitting inside, you know, daily supply. Okay, you guys kind of get what I mean. Cool. I know I've been ignoring the chat. Sorry, I get on these rambles, you guys. Mark, you said I use a trade manager that I set so I can't risk more than 1.5%. Yeah, it's fine. You owe us a bunch, yeah. Chicken curry. Yeah, you owe us some curry chicken whenever you revenge trade. Chicken curry.
I don't know why you're calling me chicken curry.
All right, let's continue. Okay, so we talked about the higher time frame, lower time frame. We're spending a lot of time on this. I didn't actually think we were going to spend this much time on trade reviews. And we got a lot of side conversations, which is good. Can anybody tell me, please, what I would comment on this trade on this lower time frame based off of all the information that we've learned here so far? Talk to me in the chat, please, or talk to me on the mic. No? Nobody wants to take a stab?
I'll take a try, Austin. So
say it again.
Yeah. I'll take a shot.
Yes, please.
Yeah. So Ashresh here. So basically, on the lower time frame, I would go. Yes.
Yeah, that's your name is Ashwitz?
Ashresh.
Oh, Auschwitz.
Yeah.
Sounds like a German camp that they held the Jews in. Auschwitz. It's in Poland, right? It's the worst camp to go to. Jesus. You guys have great names. I'm not sure if you guys are trolling me or something. All right. Yeah. I shouldn't say great name. That's not a good name to have. All right, go on. Cancel. Yeah. Let's go.
Yeah. So coming on the lower time frame, I think it's an amazing setup to go long because not short. Simply because what I feel is it broke the momentum line. Also at the same time, it took out the opposing zone. So I would look for longs right at the bottom. That would be a good setup for me.
Okay. Yeah. Okay. You would look for longs down here in this. Why can't I draw? In this demand.
Yes, but for shorts, I would not go for shorts. I mean, I would not.
Why would you not look for shorts in here?
I would not look simply because I don't know whether I'm thinking is right because it broke the trend line or the momentum line.
Okay, yeah, it did. But we are sitting inside higher time frame, a 4-hour supply that has a 2-to-1 imbalance. It removes an opposing zone. We're not trading with the trend, but I do agree. I mean, we're trading in a sideways market, but we still, my opinion, that's your opinion, and that's totally up to you. Sure. I would still look for buying opportunities because we had a 2-to-1 move away. We're a strong move, removed an opposing zone and all that. It's the pivot point zone. It's a rally-based drop. We have a lot more pros than cons. You know what I'm saying?
Okay, so in that case, probably I would go for confirmation entry only, not the set and
So
forget.
just like that, I changed your mind. Jesus. All right. Wow, you're easy to change your mind. Okay. Usually that's a little trick I play on. I mean, there wasn't a trick, but if I talk about the trend or something like that, or a top-down analysis or whatever in a private group, I can trick them sometimes to say where it's obviously in an uptrend or something, and I try to convince them it's in a counter trend or a sideways market. And then they had the right answer. They're like, yeah, you're right. No, that was my bad. We're sideways. We're counter trend. And I go, no, you gotcha. So I got you. You originally you had a plan of saying I wouldn't use it. And that's great, right? And this is a good side conversation for a minute. Always focus on yourself, right?
Okay.
You don't always have to listen to me. Just because I say I'm looking for shorts doesn't mean you have to look for shorts. Just because somebody's on a big win streak doesn't mean that there's some massive good trader. They could be just showing their winners. This is social media. At the end of the day, just focus on yourself, right? Don't ever care what other people are doing in their trading career, because nobody cares about your trading career. I don't care. Auschwitz, sorry, buddy, I'm Ashwan?
Ashresh.
Ashresh.
Yeah.
If you lose your account, if you blow up your account, if you have, let's just say you have $1,000 account and it's like your life savings, I'm sorry to say, and this might seem a little harsh, but it's just reality. If people are saying otherwise, they're lying to you. I don't care if you blow your account. It's not my money, not my life, right? The only person that cares about your trading is really you. I want to help you get consistently profitable, but at the end of the night, I'm not going to lose a minute of sleep. I might lose a minute of sleep thinking, oh, man, Ashwan is good guy, but it sucks, Oh, he's going through some hard time right now. I'm not going to sit there for hours with my eyes open thinking about how am I going to feed my family, right? So just remember, nobody cares about your trading except yourself, all right?
Yeah.
And only focus on yourself. Don't compare yourself to social media. It's one of the worst things. I hate social media so much. Yeah. But it's a toxic place, man. Just focus on yourself, worry about yourself, all right? But obviously, make sure the people that you are talking to are willing to help. And it's something that you got to do if you are going to reach out for people to help, like what you're doing here, which is good. But I'm trying to give you the straight up answer, which people seem to like. That was a side conversation. But
Austin, can I
how did we get on this topic? By changing your mind. Just because if I post a setup where I said I don't like it, because that's one of the worst feelings is when you say, like, you post a trade setup and I say I don't like it, and then you don't take it, and then it ends up being a winner. Oh, you know that feeling, right?
Yeah.
Or you're on a losing streak where you see somebody winning, and then you finally take one of their trades, and then it's a loser. Oh, right? Well, trust me, I've been there, done that, right?
Yep.
I see it all the time, people doing it too. And so this is why I say just focus on yourself, right? You really got to remain focused, journal your trades, and be open and willing-minded to learn, okay?
Yeah.
All right, let's continue this conversation. All right, so you would take for shorts. I agree. What do you think's wrong or good about the lower time frame?
Austin, I'll have a go, mate.
Is this Ashwin or Ashwin?
It's Colby.
Oh, Colby, I don't even know you, my friend. You don't even say one word.
I know, being pretty quiet. I've understood most
I
of
see
it.
your name, Colby.
Yeah,
you could have talked to me all this time.
I've been agreeing with everything you've been saying up to now, but I'm just a bit unsure on this lower time frame because for me, it's a bit small. But didn't you say a maximum of 3 candles for a 2-1 move away?
Oh, you're participating. This is what you're talking to me about. Yes, yeah, I agree. Yeah.
But that looks to 4 or 5 candles for a 2 or 1 move away to identify as a good zone.
To be honest, 2 things. Yeah, first thing is
I don't understand the entry either.
For prices to go 2 to 1, I think it needs to go down to this far, which it took 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks. Number 1, we're just going to go T, too many candlesticks. Number 2, I don't know why he's entering here.
Yeah, I agree.
Right? 5-minute rally base drop inside 4-hour supply, remove the opposing zone. I mean, sure, but it's if it doesn't have 2 to 1, I ain't trading. End of New York, beginning of Sydney. Oof, that's a risky one, yeah, because there's no liquidity, right? So that's why we could definitely see it dying out. Closed trades, notes. Without these notes, this is something that he's done well, is I can understand why he's trading this, because I understood this whole top-down analysis since then. But if this was, say, that first guy's trade that we were looking at and he didn't have these notes, I don't know what he's doing, right? I don't know. I could be wrong on this. I haven't even read this. I just see notes. Entered the trade too early before the opposing pivot point was removed. So canceled the trade and re-entered when the pivot point had been removed. Okay. So he got in a little early. He blew his load too early. So he got in on the momentum break because the momentum line kind of broke here, which I agree, but we didn't have the set criteria of what we requested at the start of the meeting, what we just talked about, right? Please make sure I'm still recording. I don't know if Zoom cancels out after 2 hours or something. So yeah, he eventually got in after prices removed this zone. I think it's a valid way to trade. I just don't trade it. So I couldn't give him feedback to say it's a good idea to do this or not. Right? Because I don't want to sit here and say it's a horrible way, don't trade it, because I don't know. It could be a very good way. But what I can offer him is to say, I really like his higher time frame. We already talked about that, so I'm not going to reiterate what I just mentioned. I agree with his momentum line break, but what I would wait for is, like Colby said, hopefully, Colby, you're still here. Thank you.
Yeah, I'm listening. Yeah.
Is that 2 to 1 move away that you mentioned and that opposing pivot point zone being removed, right? That's what I would have waited for. And then obviously the pullback back into the zone.
And you would have had a limit set on that zone, yeah?
Yes, correct.
Yeah.
Correct. I think that's a valid way. I know some people will like to do that. Like, some people will, just because I trade like this doesn't mean you have to. Some people will wait for prices to come in and then they'll set like a sell stop. So once it's already in, say up here, and then they'll get in once it starts going out and they avoid the potential loss of prices just blowing straight through. That's definitely valid. Some people will wait for extra confirmation, like they want to see an engulfing pattern zone or whatever, or they want to see some type of single candlestick confirmation, like a shooting star, reversal, I don't know, a hammer, whatever, an indicator. That's fine. You might be getting your trade sometimes filled here. You might be getting your trade filled sometimes here, right? That's totally fine. I'm not saying you have to trade like this, but I'm just opening up your mind to different ways to trade, but make sure that you are consistent with the approach. I mean, if you aren't consistent, but you are at least journaling, at least we can review to see, okay, does it actually make sense or not? Colby, does that make sense?
Yeah, perfect. Yeah, I was just making sure I was correct in what I was thinking.
Good. You're a very intelligent man, Colby. Where are you coming from?
I come from Newcastle in England.
Newcastle, England. Isn't no? Who's in the Champions League finals? Isn't it the semifinals right now?
Quarterfinals right now.
Quarterfinals. Okay. Who are you cheering for?
Newcastle are in the quarterfinals, unfortunately.
Yeah, they are not. Yeah.
Not yet. Hopefully next year though.
Yeah. Who are you cheering for now this year? Who would you like to see?
I'm not really bothered. I just hope Newcastle do well this year, to be honest.
All right. Good on you. Well, I hope
Hey, Austin, can you repeat that? When you say it has from your zone that you identify in the higher time frame, it has to be 4 candles to 2 or 3 candles, or momentum candle even the zone, for it to be a valid.
The imbalance, the 2 to 1.
Yeah.
Ideally, well, if you think about it, the whole concept of supply and demand, I mean, it's a theory it's not a theory, it's basic economics. It really is. That's been used for thousands and thousands of years since mankind, trading for goods and services. That's essentially what the money is used for. It's a value that we use to exchange for goods and services. Back then, caveman, I don't know, you trade beef on a stick for chicken on a stick. I don't know, right? But maybe then 100 years later, beef's more expensive. But anyways, it's been used for a long time. Companies still use it today. It's just how the world works. Inflation, supply and demand. If there is a significant imbalance between buyers and sellers, right? Do you think prices will move in a very strong fashion or in a slow fashion?
Very strong.
Very strong, I agree, right? There's a significant imbalance, right? That's like one of the examples I give is, say, I don't want to use Newcastle because I don't know if Newcastle is good, but we're going to use Real Madrid. They're a good team,
Oh, they're
right?
good.
And Newcastle's running
is a
fifth
Real.
right now in the Premiership.
Okay. Okay, let's just take Real Madrid versus some Division 3 team, right? A Division 3 team. The skill gap difference between these two clubs is massive. At the start of the game, it is going to be 0-0, right? But by halftime, it's most likely they're not even going to have their starters playing Real Madrid, but by halftime, it's going to be 10-0, right? It's probably going to be more, but you know, they're trolling, they're playing jokes, they're having a good time and all that, right? They got their third and fourth strings in Real Madrid by halftime. That's a significant imbalance between the skill gap. Versus if they had, say, Real Madrid versus RM versus, say,
Liverpool.
Liverpool. I was going to go Newcastle.
That's my team.
We're going to go Liverpool. But they're a good team. In general, they're a Premier League team, right? They're a high-skilled team. I don't know what the standings are. I was personally a fan of my favorite player of football, as you called it, and I call it soccer, was always Ronaldinho. He was my favorite growing up. My favorite team was Manchester United. I don't really follow it too now. I follow more the Mexican League and the Spanish League because that's where I'm here, and the South American because that's where I traveled a lot. So I follow those leagues a lot, and I go to the games here in Cusco, but I don't follow too much about these ones. These two teams at the start of the game, it's going to be 0-0. And by halftime, it's going to be, 1-1, 2-1, or something like that. You know what I mean? It's going to be even teams. It could be 0-0. At the end of the game, it's going to be 2-1, 3-1, 3-3, whatever, 0-0. They're two equally matched teams. That's price going sideways, right? That's price kind of like this. Let me redraw this. I just deleted everything, whatever. You guys get it, right? Slowly going in your favor. If there's a better team versus, say, Real Madrid's better, it's going to look like that, right? It's slowly going to go in their favor. Versus if you're trading say you're going Real Madrid versus a poor Division 3 team, the imbalance is going to look like this, right? Instantly, there's going to be goals scored. If you look at a live betting chart, you'll see it slowly going like this, right? Sideways like this, because it's evenly matched teams. And then there's a goal, it spikes, okay? Because now it's changed the odds completely. One team is heavily favored to win, but that is essentially what we're trying to do when it comes to zones. Does that make sense?
So the better zones are the zones with a huge imbalance leaving the zone. Those are the stronger zones, supply and demand zones.
That represents them. Yes, that represents, and on the lower time frame, because it's all fractional, right? Lower time frame to higher time frame, it's all the same things. It's just different value put on different time frames because bigger is obviously better than the smaller time frames.
Gotcha.
So yeah, bigger, there's a significant imbalance between buyers and sellers. Prices will move quicker. Now, that doesn't mean that it's going to hold. No, it doesn't. But statistically, reviewing wise, I guarantee you, if you review your trades, if you have 100 trades, you will notice, you will come back to me, just like how everybody has come back to me in the private group and they say, these are the common things that the winners have. It's the things that I've been preaching. Okay? We good on this conversation? We solid?
Yeah, I'm good.
Okay. Colby, do you have to go?
No, I'm fine.
Oh, talk to me on the mic, my friend. Okay. So there was a lot of questions. One second. Let's see. There was a lot of questions, just general questions. Some could be very quick, some could be long. I thought we could just kind of shoot through it. And if you guys have any questions, feel free, and I'll kind of ask you guys in general. I mean, this is a common, I actually found this interesting. Sometimes I just throw up polls out there. Before I get into this poll, I remember I made a poll last year talking about Ice Cube. You guys know Ice Cube?
Yeah.
Right, the rapper, but now he's like a movie star guy, the black guy.
Yeah.
Right. I made a post, a reel or a poll, and I explained my reason of why he's a sellout. People cherish him and put him on a high podium. Yes, he was a rapper, but when he was with NWA and all that, he used to say that he doesn't like police, the government, he hates all that stuff, right? He was a huge rebellion, right? Didn't like the government, didn't like the system. And then as he got older, what is the part that he plays in every single movie?
All police.
Plays the police. He's a sellout. Hate it or love it. That's my opinion. Sure, he's a good actor, but he's a sellout. His mindset changes. Obviously, he was a kid younger, so I totally understand that, but he's changed his mind. Let's say it like that. I don't know why I thought about that, but every time I see polls, I always remember that poll. And I did a poll once where I didn't tell people that, and then people were like all over him, loved them, and then I shared my side, and then all of a sudden people started changing their votes. So it's interesting too, just to see how easy you can change people's opinion, but it is also interesting because it's true. If this becomes a video on YouTube, which it probably will, feel free to let me know your thoughts. All right. This was a poll I made earlier today. I was just curious because it's something that I've been speculating with ever since I started transitioning. It's a hot topic as well. Also swing trading versus day trading, but that's a separate video I've made already. Trading a lot of markets, having access to, because people ask me, should I be trading 20 pairs or more, or should I focus on 1 to 3, right? You focus on 1 to 3, you are going to get to know those trading markets extremely well and those trading pairs. And so you can base your trading off of that. And maybe you trade one extremely well, like me, gold, silver, oil, like those are my best 3. So that's why I'm really just trying to focus on those versus trying to trade a bunch. Versus if you trade a bunch, actually, before I talk about that, there is a con to that where you might not get into too many trades. There's a chance that you might not take too many trades, and then you start forcing trade setups because you haven't taken a trade in about 3-4 days. You start thinking in your head, well, I haven't taken a trade. I need to take trades in order to make money. If I want to make this work, I got to take trades, right? So then you start forcing trades. You end up taking bad trades. You lose. You get frustrated, right? And it's a whole trickle down effect. I totally get it. I've done it, right? And some people will subscribe to that. So there's pros and cons to that, while others will subscribe to the thought process of trading a lot of markets, say 20, and looking for a very precise trade setup, and being a very mechanical trader and saying, this is the exact setup that I want to trade and only trade that, right? They will have that available to them because they're trading a large amount of pairs, So there are pros and cons to each. You might run into taking a lot of trade setups then. You know what I mean? You might get overwhelmed with the information overload. So it's important that you start small and you add from there. You start trading 10 or 3 or let's just say 5. Start trading 5. I'm not saying you have to do it. I'm just using an example because when people come to me, they're like, I want more opportunities. Okay, how many are you trading? 10? Okay, let's add another 10. Okay, you want more? You want more? Okay, now let's start integrating the single time frame sequence setup. Okay, you want more? Now let's start integrating the weekly 2-hour, weekly 4-hour, daily 1 hour, daily 30. Let's start looking at multiple different time frame sequences, right? And so that's how you can then to say, I am now over trading and I'm getting information overload because now you're looking at 20 different markets, 20 different markets, 3 different time frame sequences, and all that stuff, and it's very confusing. Do you guys follow that?
Yeah. I agree with more market. Like, if you look at more markets, there's more opportunity.
Yeah, more opportunities, but you potentially hurt yourself by information overload and something like that.
I suppose.
So there's pros and cons.
Need to look at the other one.
Yeah, there's pros and cons to them, right? So you pick whatever one makes the most sense. Maybe you trade one pair like me, like gold, silver, oil, really well, and that's why I'm focusing on that right now, right? So just a mindset to think about and something to consider, as I hope throughout this whole meeting or video, whatever, you guys have learned that there's many different ways. Say again? Whose wife is that? All right. Okay, so let's move on.
Well, then
I think
you go back and get what you want.
Somebody needs to
No.
be muted.
No, John, what does she want,
Want
John?
to see if it starts buffering on us. Can you lower it, please?
All right, John, we got to mute you for a second. Sometimes I like to hear the drama, what's going on, you know? Sometimes you hear some nasty arguments. I
You're
was kind of
something
hoping that
else.
was the chance
You're,
right there.
You're a mess. You're a mess, man.
I think it's funny. It's classic. Okay, let's go on. You got to find some humor in this stuff, man. After so
Yes,
many
you do.
years and
Yes, you
answering
do.
yeah, answer a lot of the same questions. So I got to throw my own personality in these calls. Okay, so question. Okay, hi Austin. If you guys obviously have more, just talk. But I'm not going to rapid fire through them. I am going to answer them because people might not been able to make it. Is there anything else should do other than waiting for confirmation? Things like set and forget. I feel like we did address this a lot in the first half, talking about the confirmation setup, really what we are trying to see. Obviously, I know that we're going to circle back to this as people ask more questions on certain things, and it's going to circle back. And so that's why listening to this whole thing is important. As there's little like 30-second nuggets of gold in there, right? Things like set and forget. Like I commented on the set and forget, like trading with the trend, trading at the extreme of the higher time frame zone, as long as there's a lower time frame, high quality rally-based drop or drop-based rally zone. The oil trade is the one that I'm referring to, and that's where we talk about that a lot. So obviously, if you didn't listen to that part, I strongly recommend you do. And then waiting for the confirmation, we did talk about the top 3 things, and obviously little things like how far did prices leave, how much time spent. I mean, think about it. If there is a base, like let's just say there is a base. Let's just look here. We have a drop base and it goes on for 20 candlesticks and then imbalance. Does that really tell us it's a good, strong zone? If that is a 5-minute base and there's 25-minute candlesticks going sideways, that's probably not a 5-minute zone I really want to be trading out. That's too much time. It could be maybe a 1 hour or a 4 hour, but I'm not going to draw it out on a 5-minute. Okay. Yeah, if there's too much time and it's just dead, we call it dead fish, then don't trade it. Okay. Okay, trading discipline. That's a handful of a question right there, and that I need somebody to talk to have that conversation, unless that person is here in the call. But trading discipline, backtesting will definitely help with this, as it's going to give you the ability to test the strategy over 30. 30 is the minimum. You know, if you're like trading 1% backtesting, you're trading 1% risk, and you say lose 20% and you take 50 trades, it's like, okay, like you should probably change something. Like obviously it's the strategy. But if you're like break even or just below negative, not even negative, you're like around break even, let's just say, or positive, then obviously you should be giving it another 50 trades. You know, because you're not really giving a strategy really enough time over 30 trades, 20 trades. 20 is the bare minimum to say, should I really continue? If you notice a huge difference, like I say, like it's not working, then like, okay, like skip it and move on, right? But you're really going to start building confidence. And this is where I usually talk about, like, if you go into a haunted house, you have, people love my haunted house analogy. I know you guys might have heard it, but maybe some of you guys haven't. If you have the haunted house, there's my haunted house, and there's me, and there's chicken curry. All right, chicken curry, you don't believe in ghosts, right? Curry chicken.
No.
All right, so you don't believe in ghosts, but I do. Now, I have never seen a ghost, but I have just heard people say that this house is haunted. It's a haunted house. I've heard so many people tell me they've seen ghosts when they go in there. So I don't go in there, but I believe it's haunted. So I have a belief system of, I don't know for sure, but I think it's haunted. All right. Well, you come next to me and you're like, no, I don't think it's haunted at all. You don't believe in ghosts. So you go into the haunted house, and then 5 minutes later, you come screaming out because you actually, there's my ghost. You come 5 minutes later, you come screaming out back to me, and then you run up to me, and I'm like, "What happened? What happened?" You're like, "I saw a ghost," and you actually saw a ghost, right? From that point in time, your belief system 5 minutes ago was not believing in a ghost. Now you have a belief system of you actually believe in ghosts, and now forever in your life, you're going to go forward like ghosts are real, right? That's a pretty impactful belief, right? Something life-changing just happened. That's a lot of the time people change their lives all of a sudden when something drastic happens in their life, you know? Well, like in this case, you saw a ghost, all right? So in that case, you're freaking out that you now believe in ghosts, okay? So your belief system is going to be different from mine, even though I went up to that house thinking there's ghosts, but you are like concrete evidence believing ghosts. So if you backtest, versus you just hear me rambling on for the last 2 hours about this methodology. But if you backtest, you actually trade for yourself, you see this stuff work, you look at the markets, you are going to have a different belief system than if somebody is just taking my word for it. You know what I mean? You actually put in the time to learn the methodology. What's a zone? What's the concept of the methodology? What's the top-down analysis? Why are we doing what we are doing? How to properly review. You are going to have a different belief system, right? What can help with that and being consistent, but also having a very mechanical way of trading. And that's why I tell people for new traders, I really encourage people to adopt a very mechanical way of trading, because if you don't, and this is why we were talking earlier, Chicken Curry, about you being an emotional decision maker, trader, and you're making all these decisions. And I said, hey, I just want you to be very mechanical. We can then review it to see what would make more sense down the line after 20 trades. You see what I mean? So make sure I'm recording. Oh, thank God. When I edit this video, I'm going to be sitting here forever. Whew. I am not going to re-listen to these videos. Because usually when I listen to a video, I got to come up with the idea. I got to record it. I say the same parts many times. Sometimes, unless I just ace it. And then I got to go back and edit the video. And then I got to watch the video to make sure all the edits are good. And then I upload the video. And I make sure the video is good and it's uploaded. So by the time you watch it one time, I've watched it, gone through it in my head many, many times, 7 times. So I know my videos quite well, but discipline and patience, confidence will come from knowing the system and back testing. And that's why I really encourage people to test out things. And that is a video that I made on my YouTube talking about, don't know if it's in here, right here, why you should be back testing, right? Top 3 tips for back testing, okay? That's how you're going to build that. And then once you review, 20, 30 trades, you see what's working and what's not. You will see, hey, this is not working, this is working. Then you completely remove those bad trades, and then you focus on the good trades that are making you money, right? You have a rough gem. I think the example I give is like you have a rough rock, you carve it into a rough gem, and then you review it, and then you carve that rough gem into a polished gem, right? Which is your trading plan. You're getting rid of what is not working and focusing on what is working. Does that make sense or no? Where did I lose everybody?
Totally.
Yeah.
Sounds
Okay.
right to me, yeah.
All right. Good. Let's continue. I want to know what trading. I want to know what trading firm and chart you use in Canada, BC. So yeah, I'm from there as well. I use the broker Global Prime. That's in every link in the video that I send out, as well as in.
And you use them in the US?
Unfortunately, I don't believe you can. No, not yet.
Okay.
I know it's something that they're working on, but they say they've been working on that forever, and I don't think they're doing it. There's a lot of regulation and stuff like that, and from what I'm aware of, they don't like working. Okay. It's a very big debate what's going on, but I don't think, well, obviously they have a lot of laws and regulation about this stuff, but they really don't want people's money leaving America and then going into markets that aren't necessarily going to boost the economy of the Americans. Like if I buy with Global Prime, the US 100, I'm buying the CFD, the contract for difference, the paper version. I'm not actually buying the real stock market. I'm not elevating the stock market to go higher. My bid's not actually going to the real exchange, right?
Yeah.
There's a lot of debates. Anyways, I've made videos on this Strongly recommend everybody, because finding a broker is very important. The best Forex broker, trading broker to find. It's a very good video. I should actually remake it. It's 2001, but it's still very relevant. But then understanding the truth behind the brokers, that's a very good interview I did with the CEO of my broker, talking about, you know, how they make money, what are the tricks that brokers do, and just general broker talk, that like not asking stupid questions. You know, I'm actually talking to the CEO, talking about how my order is actually getting filled. How do I know if you're not taking the opposite side of my trade? What's the difference between A book, B book, and all that stuff? Like, it's a fantastic video.
Yeah, I saw that video.
Yeah, it's honestly hands down the best video that somebody will listen to about currency brokers, Forex brokers. Anyways, let's continue. The liquidity issue, I don't really know what this guy is asking about. Liquidity issue. This was literally the question. The liquidity issue, I don't know. So unless he's here, I'm going to move on. I did make somewhat a video. I just don't like rambling on about something for 10 minutes unless I'm sure about the question. And what I would direct you is something here, traps and liquidity searches is something that I would recommend. I personally don't recommend going and looking for purely stop hunts. I don't think that's a good idea to go off and trade. Where is the stop hunts? These guys, these big money companies are not making billions and hundreds of millions of dollars a year by looking for retail traders' stop losses. They're not, right? Sure, they can like have these like stop hunts in general places, but just to go purely off of everything's a stop hunt, I think is a bit of a lie. But that's my opinion. Okay. My question would be the higher time frame. Does it have to meet every criteria, or can we relax some rules? We can't go, if you are going to trade multiple time frame, I tell people you cannot go down to the lower time frame unless you have a good higher time frame. Everything starts with the higher time frame unless you are trading the single time frame, which we talked about at the start of the video.
What time frame do you use, Austin?
What's that?
What time frame do you use?
Oh, well, I use it's a question that's asked somewhere in here. I use a little bit of everything, but
yeah, I thought so.
If I'm going to be trading higher time frame, I'm going to be typically using 1 hour or 4 hour.
Yep.
Okay. You were here at the start of the meeting, right, where we talked about that different time frames?
I missed the first. I think so. Yeah, I missed the first 5 minutes. I was getting back from them there.
Oof, well, 5 minutes is the most important, my friend. All right, so let's continue. Oh yeah, I didn't really answer that. Relax. That's not something we relax on. Like I said, making sure there's other stuff as well, but tradable zone, strong 2-to-1 move away, removing an opposing zone or breaking momentum, right? It's hard to screw that up. Okay, if you don't have it, skip it and move on to the next chart. Skip it and move on to the next chart. That's a very important nugget. That's only going to be a 30-second clip of a 2-hour-long video. Is if you don't see anything, skip it and move on. Okay. Okay, hello. Thanks for planning this meeting. Okay. You are looking to master. I work on Ninja Trader platform, crude oil, gold. I don't know what ZB is. Zinc or something? NASDAQ. I have 2 questions. What is the best? That's an iconic question. What is the best time frame for day trading? I think I kind of answered this. There is no best one, but that picture that I will go back to, I'll post an image on YouTube of what it looks like, of the time frames that I recommend, but there is no best time frame. But I will typically use if I'm using multiple time frame, 4 hour, 1 hour is the highest time frame, or my entries usually are on the 1 minute or 5 minute. Okay. That's ever since I'm mainly focusing on the 3 I mentioned throughout this call. Okay. Oh, we did answer that. How to journal one's trading. I did mention that. What to include in your journal, how to properly journal. Now, there is a video I did, and top 3 free trading journals that I do recommend having, or not having, just picking one. My FX book is a good free one. that will keep track of everything, that are good stats to go back on. And then I have 2 questions. What is the best time frame for day trading? I think I kind of answered this. There is no best one, but that picture that I will go back to, I'll post an image on YouTube of what it looks like, of the time frames that I recommend. But there is no best one. but I always recommend having your own little journal, whether it's I do mention it in there, like how to have your own little file storage of your own little journal pictures, or your own Discord server, or you could journal it throughout one of the softwares that I mentioned in that call. But that is a great video that I would recommend if you are curious about that. I have my FX book, and I have this private Discord that I just post the trade reviews in as well, just so I can go back. Good. Okay, thanks. Okay, more about the Moneyball trading pro. What broker do I use? Global Prime. I mentioned that. I think it's going into After Prime now. I think that's what they're splitting into 2 entities now. I think that's happening like April 1st. What instruments do you trade typically? I used to always currencies. I used to do a wide range of currencies. Now I'm just really focusing on gold, silver, crude oil, and the stock market, because those were my best ones from last year. But I am open to sometimes swing trading the currency market, as long as it's a swing trade. Just because it works for me doesn't mean it works for you. Everybody's different. What time frame do you trade off of? I mentioned that, 1 minute or 5 minute. Is there live trading available? I have that email. Yes, I don't have that set up for right this second because I just copied and pasted photos, but I remember this email. I will send that to you not after this call, but later tonight. Are you a prop firm? Are you on a prop firm? No, I'm not, but I will be later this year. Could I recommend any? I haven't done too much research, but I think the top 5 I think people use are like FTMO, My Forex Funds, top 5 percenters, and Top Step or something. And then there's the Funded Trader. There's like the top 6. Okay. Yeah. So My Forex Funds, FTMO, 5 percenters, Top Step, Funded Trader. I don't know. You'd have to look at pros and cons of all of them and all that. I don't have a best one for you, but those are kind of the top 5 to top 6 that I hear the names floating around. Okay.
I've been using My Forex Funds for a while. They're very good.
Yeah, what's nice about those guys is I think they're very generous, and they offer you well, first off, most places offer you they need 10% as a return, and these guys offer you 8%. And then as long as you are profitable at like 1%, 0.5% in profitability, they will extend your trading
challenge.
period.
Yes.
Of 30 days.
They're very good at that.
Yeah, they won't make you restart like most of them do. They'll let you start where you left off, but they'll give you an extra 30 days.
30 days. Yes. Yeah. And their payout is very, very simple. Their payout, I've gotten paid from them several times. Their payout is very simple.
Oh, there you go. Tips on the lower time frames. I think I definitely did answer that. You might good or bad. Okay. Yeah. When it comes to good or bad arrivals, this is a concept that's thrown out there a lot. Good arrival versus bad arrival. This is a massive difference in my trading. And this is why a lot of my trades that you'll notice, look at the 3 today. Price is coming straight back up into it, right? That supply getting sold right there. Price is coming straight back into it. And my take profit is either at 3-to-1 or at the opposing zone. Okay, so this is my opposing 4-hour demand zone. What I mean by just clean arrival and all that is, say, for example, we have a sell setup. Let's just say that if prices rally up and then base, and then rally, that's not something I want to get into versus if prices go like this, come straight back up. Just statistically, I have noticed a big difference win-loss between this and this. Okay, this seems to be working a lot better. So that's what I mean by clean arrivals without going into a 20-minute conversation. So I would look to incorporate that if that's something you're interested in. Obviously, you're going to cut your trades in by half, but you'll notice everything is clean arrival. But it's a big difference. I notice when I get people to review, 9 times out of 10, they come back to me and they said there is a pretty big difference between the winners and losers. Okay. Do you guys understand that? Yeah, I think we talked about kind of what's a bad trade and all that. Obviously, we can't cover everything. It's so much to cover. I'm really here to answer your questions. but hopefully you can get an idea of what I recommend. Can you go over your confirmation entry strategies? Yeah, I think we smashed that out of the park. Okay, what is a 2-to-1 imbalance? I think we covered that throughout this meeting. If you did not, you are not listening. All right. And definitely we talked about it in the first hour, like the whole meeting, the whole hour. How and what to journal. I think we did cover that as much as you can. Once again, first half, this is not a meeting you want to sleep on, right? If you're going to sleep on it, you're probably not best for trading this methodology, or you're not taking it serious quite yet, which is fine. You know, some people might be interested in the Lambos, the popping bottles, the $1 million trade, taking a private jet or a private helicopter to get to your private jet, which will then take you to your island where 20 girls are waiting. Sure. You know, if that's your mindset right now, then save this video, write it down on a piece of paper, and come back when you realize the $20 signals that are selling you on that don't end up working. But hey, if they do end up working, congratulations. That's awesome. I'm very happy for you. But yeah, a lot of good, solid information. Even if you're not trading the methodology, it's just so many golden nuggets. But I don't think if you're interested at all in the strategy, I don't think you would get this far. How much should I risk? A lot of people come to me and they blow their trading account. Don't risk more than 2%. Stick to 0.5. Stick between 0.5 and 2%. Or do 0.25. Just don't risk more than 2%. Number one thing, people come to me like they've blown 3 accounts. I'm like, how did you blow 3 accounts? No risk management, no stop loss. It's so stupid. I don't know why people think, oh, that they're stop loss hunting. That's actually a concept we talk about in the broker video that I mentioned earlier. Very good video for people to listen to. Are they actually stop hunting you out? But long story short, don't risk more than 2%. I think that's a good, healthy risk for people to be trading consistently. And that's why I say consistently risk the same amount and go for the, be very consistent at first, you know? My brain's starting to die down. I don't hold these meetings for 2 hours. What do you think of EAs? I definitely did a video. I know people come to me all the time, and sometimes I just put on an EA just for the kicks and giggles, and people will say, what's this brand new EA are you trading? Like, is it some magical EA? And I just do it for the kicks. And a lot of people message me. I really don't use EAs. I think there's a time and place for them. Use them as an extra probability, because think about it, there's a side conversation here. If we are going to take a trade, you are going to come up with a bunch. What we're trying to do when we're taking a trade is, the way that I kind of explain it is, remember those old little scales, the olden time scales where they would leave their gold coins or something like that, and it's a weighted scale. What we're trying to do is stack up one side of why it's a good trade, right? Price inside higher time frame, say demand, we're trading with the trend. That's really, you know, it's a high quality zone. The higher time frame, the lower time frame's confirmation. It's a good lower time frame quality zone. Prices above the 200 moving average, right? We're trying to stack all these things of why prices will be a buy setup and go up versus, you know, the cons, which will push prices down. You know what I mean? And so we're trying to create a stack of evidence, like a court case, of why it's a good trade. And when you have, and statistically, when you have, you know, 1, 2, 3, 4, 5, 6, statistically 66% of the time it's going to do this. And you're just going based off of straight probabilities and stats. And so one of the best books and videos I recommend people listening to, the book is called, 2 books. Mark Douglas, Trading in the Zone, also has a fantastic videos on YouTube breaking down probability-based trading, and that's why I'm a big proponent of it. But then also on journaling is the guy runs a prop firm who is at Mike Bellafiore. He owns a book. He wrote a book called One Good Trade, and he talks about focusing on one good trade and making sure that it's an A+ trade setup. And you find the difference between your C setups, your B setups, and your A setups, and how to properly journal a trade and only trade on these trade setups. He does a really good job on that. And those are 2 books that I think are must reads, and the video of Mark Douglas trading in the zone on YouTube, 4-part series, completely free. Strongly recommend that, right? Woo! What do I think of EA? So yeah, I don't know how we got onto these side conversations. What do I think of EAs? That's a good question. They're good. Don't think that there's some magic holy grail EAs. If you think it's as easy as just trading 1 or 2 EAs overlapping one another, or an EA telling you to buy, or trading one candlestick pattern, I think you're in for quite a learning experience over time. Because if you think just trading, let's just say a head and shoulders pattern, like you guys know all those head and shoulders patterns, right? It's kind of like, that looks wrong, but you know, it's a head and shoulders pattern. It's like a bearish pattern. There are indicators or expert advisors that will automatically spot these on 20 different markets. You can select which ones you want, and it will trade this precisely of how it's supposed to be traded and with proper risk and trade management. If it was that easy, everybody would be making money, all right? But it's creating a trading, not a trading plan, but enough trading evidence, building a bunch of things to say why prices are statistically going to do this over another, right? This is why I say, hey, it's nice. This is a good trade because it has this, it has this, it has this, it has this, it has this. But it just because it has all these doesn't mean it's going to work, okay? And start adopting that as your mindset, because the best trades can work. Sorry, the best trades can fail, and the worst trades can work. Whew. Really good stuff. Really, really good stuff. Posing pivot. Okay, yeah. Do you apply the same rules for long-term trading? Yes, I do. Let's continue. How should I build more confidence? I feel like, how to become a less emotional trader. I did mention how to build confidence, obviously backtesting, seeing it work over time, being surrounded around other like-minded traders, learning from somebody that's just going to actually help you and support you, rather than just telling you to blow off and just watch the videos. And that's something I do very well. But less emotional trader. That's where I write a blog post on that. And man, I'm telling you, that tips playlist is fucking gold stuff. I'm talking about reward to risk, but the good video, 3-step trading plan and trading like a casino, those things that I just talked about for the last 5-10 minutes, right there, those 2 videos, fantastic. They will also be in the description below if this becomes a video, which it probably will. Okay, where am I? Okay, what was the question? So okay, we'll go back to the EAs in a second. That's why I like making my trading mechanical, and I advertise people making it mechanical. You can't do this unless you have this. It needs to be a 2-to-1 move away. It needs to remove zones. It needs to be inside higher time frame. You create a tick sheet. You think like, oh, this is so confusing. It's really not. Obviously, it takes a bit of time to learn, but that's just like anything. You're trying to build a skill that is going to make you a first or second stream of income. Maybe go full time, travel the world, become your own boss, whatever you want. I don't know. Everybody has their own why. It takes time, right? But if you create, this is something that I did, and this really helped me focus on good trades. Create a tick sheet. Are we inside a tradable zone? What's the trend? You know, create a 5, 6, 7 tick sheet, right? Of what your trade setup is. And then obviously chicken curry, I forgot to mention you to have in your trading plan when you create that, have 3 to 5 trade setups in your trading plan. So you know what they look like. And anytime that you take a trade, go back and look at the trade setups and say like, hey, does this trade setup look like the 3 to 5 trade examples that I have in my trading plan, right?
Okay.
That will help you. That will help you a lot. But then go through it. Yes, it's a tradable zone. What's a tradable zone? You know, that's like you could have a side dash point. What's a tradable zone to help you with your notes, right? Tradable zones are this, right? We talked about that in the first half. What's the trend? Are we uptrend or sideways market? I don't want to trade counter trends. So say sideways market or trending. Lower time frame, double confirmation. You know what I mean, right? Creating a tick sheet. I explain it in that video, 3-step trading plan, becoming a very mechanical trader, trading like a casino. Those are 2 fantastic videos. And that's what I would recommend. That's mechanical trader will help you make less emotional decisions. And that's why I said with chicken curry that if you start having less rules and you're less mechanical, you open yourself up to making emotional decisions. Cool. Really quickly, going back to this, what do I think about EAs? I think they're good, but use them cautiously. Use them as extra probabilities. Hey, price reacting off of the 200 moving average. Hey, price above the 200 moving average. Hey, Bollinger Bands overbought, stochastics oversold, and I'm looking for buying opportunity. Right? Use them like that. Don't use them as like, oh, it's overbought, it's going to sell off. Okay. How should I build more comp? Okay, we talked about that. Best trading timeframes. I think I talked about this quite a bit. And the best trading strategy. There is no best trading strategy. Everybody's different. Find one that makes the most sense to you. Struggling. Okay, then obviously struggling. This is something we talked about through this whole meeting, but struggling to break even, profitable. Holy crap, I did a video on this. I'm just making sure I quote these videos because in case people just want to go back and listen. Profitable trader, I think a video where I outline kind of the cycle of what I would take people in the private group, what to do. And then I think I uploaded a video. I mean, I know I talked over here, day 1 to 90. It's like 2 videos. Okay, what would I do if I would start? What would I do if I started my trading over again? But that one is good. But then I also mentioned it in that supply and demand course video. I mentioned it quite a bit in those videos, especially in this video. I mentioned it. The course video, 21K views. Thank you guys very much. I appreciate that. Cool. Okay, where am I? Yeah, so struggling, typically, I explain it so well in those videos. I'll have it listed in the description below too. Struggling to break even. Typically, these traders are going to be all over the place. They don't know too much what they're doing. This is like a 30-minute conversation that I don't want to get into this second because I feel like I've explained it a lot throughout this video. The big difference, what I can tell you is the difference between traders that actually make it and don't. And there's people that message me that never joined the program and they spent, say, 2 years or a year and a half watching my program, watching my videos, my YouTube videos, which I don't hide anything. And they ask me questions on social media and it takes them a little bit longer to become profitable versus people that might join and make a financial investment, which they typically will take it more serious and they can actually get direct one-on-one help. And they have a way bigger odds of actually making it. But at the end of the day, I think it's like anything in life. The people that put in the work tend to be the best traders. They're the people that are showing up to the meeting. They're asking questions. They're posting trade reviews. They're talking to me one-on-one. They follow up with me on the things that I ask them to follow up with me. And they make the adjustments. And then they make the adjustments. Okay, this is what we're going to do now. Come back to me in 30 days or after 20 trades and let's talk about this again, right? Okay, you've been consistently profitable for 2-3 months. That's fantastic, right? It's at the end of the day, it's those people that are actually disciplined enough. And this is why I preach it all the time. Trading strategy, become very consistent with it. Learn the methodology, become very consistent with it. Journal the trades so you can review to get better, right? See what's working and not working, remove what is not working. And that's a big thing that I recommend. And it's a big proponent and reason of why people don't make money. You know what I mean? And so that's what I would say is make sure you journal your trades and you're consistent with the approach and you actually have proper risk management. And, after 30 trades, you review, you get better, you do the same thing. You remove what's not working and then you focus on what is. And yeah, it takes time, right? People just don't want to do that. They lose 4 trades, 5 trades in a row, and they freak out and they quit and they move on to the next system. Until they realize that's not the way to go, they'll be all over the place and usually they'll quit before then. But if not, they eventually get to that stage. And, people come at different times when they're ready to join me in my program. But if you guys ever have any questions, you guys can always ask me anyways, right? But that's would be my comment, but I also told you to watch those other videos. Did you guys have any comments on what I just mentioned right there? And in fact, do you guys have any comments or questions or anything throughout this whole thing? Because that basically summarizes everything up.
Perfect. That for me. One thing I will say.
Any other side
is,
conversations, strategies, problems that you guys are struggling with? Because I expect you guys to be pros now after this.
If anyone's struggling to understand it, watch the trading nut videos. I know they're over an hour long, but that's the most beneficial videos to me so far.
My videos with trading that?
Yeah.
Yeah. Don't be plugging other people's YouTube channels here without
No,
me
I'm
being
saying I've watched all your videos many times, but the best ones that's helped me the most are the trading nut ones.
Really?
With yourself, yeah. Honestly,
Yeah. When I was doing that video with him, that will be in the description below as well. I did 2 of them or 3 of them or something like that. I noticed a lot of people, it wasn't to do well, even though I came first place in the trading competition. It wasn't to do well or anything like that. It was, I only skimmed through 3 or 4 of them that he's done with. And I noticed none of them were actually talking about trading. Like they just
I haven't watched any of the other ones.
Say anything. They didn't say anything that actually was beneficial or any, trying to think, value. I'm thinking of value. There was no value drops in those videos. There was no, this is the mindset that I think that you should have. Now, what are the cons of this? You know, why am I actually trading this strategy? What are other people thinking about this trading strategy? What makes this a good trade? You know, why? Okay, I lost this trade. Now, what are people thinking about what their mindset probably is? I'm having these conversations openly as I'm trying to backtest, right? I think that's what a lot of people liked, and a lot of value drops that were happening in those videos, right? Because a lot of people just didn't talk and they said trade, right? That was my goal, and it just turned out I came first place in the competition. But thank you for watching, though.
No, honestly, that's just for everyone else watching the video. If they feel like a bit lost, go and watch them. Honestly, it'll make a difference.
Yeah, you guys got a lot of value from this, and a lot of value in those tips playlists and videos that I'll have below, and everything throughout this call. You know, fantastic. And if you guys ever have any future, maybe something didn't spark up in this call, but if you guys have questions now, then just drop them in the comments. You know, or you can always reach out to me. Right.
Yep.
You guys good? Any other questions?
That's everything from me.
No.
I think everyone else fell asleep, haven't they?
Yeah, everybody's chilling out. Everybody got their stuff answered. It's really good. Some of you guys were here the whole meeting. I understand it's a lot to ask people from around the world to sit here for 2.5 hours. I really hope this. Usually I have a backup recording like an OBS going. I just hope my Zoom. I know my Zoom is going overcharged. I am getting overcharged on my Zoom calls this month. All right, and that's good. We will end it here. And if you guys ever had any questions, like I said, reach out to me. And if you guys ever want to be part of the program, you guys know where to find that, moneyballtrading.com. And I'd love to help you guys where we are trying to help traders become consistently profitable in 90 days or less for the traders willing to put in the work. All right, guys.
Yep.
Let's end it here.
Cheers,
all right. Cheers,
Safe
guys.
ball.
Have a great time. Thank you, guys.
Appreciate it, Austin. I sent you the picture of the card.
I want that picture, my friend.
I sent it to you. I emailed it and I sent it on Instagram.
All right. Love you, buddy. Cheers.
All right, man. Thanks so much for your time, man. I appreciate it.
All right. Have a good one, guys.